a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line, we'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential. for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everyone. Yay, it is Friday, October 28th, 2022. Carol Masser along with Bloomberg's Tim Stenovic here in our Interactive Broker Studio. I know, man.
We've made it.
Looks like we made it.
Yeah. I mean, I don't know if you can sing that, but I like it.
Certainly
you did
can.
a good job there.
So markets are rallying because you know what? Tom and Giselle are back on the market.
Oh, I was going to send that to you this morning, but then I realized as soon as I saw it, you'd already seen it, so I didn't even bother.
Now that my team is like sharing, I'm kind of sad.
Okay. I don't know if we'll do this as any part of our fill today.
It's not where the market's rallying.
It's not.
It's really bad
Okay.
Apple.
It is. You know, you could say it's the apple of the market's eye today.
I wouldn't say that, but you might.
You wrote that. I think it's pretty good.
Whoa, tough crowd. We're going to talk about the trade in just a moment. We're going to talk about, yes, Apple's up, but Amazon is down. We're going to tell you about that route.
And Twitter, public no more, and the bright spot when it comes to social media's week of chaos. It wasn't just Twitter.
No.
Wasn't just Snap last week.
Somebody actually did
Wasn't
well.
just Meta Platforms. Yeah, we're going to tell you who that is and why.
Okay, we're also got the crypto story. I got to tell you, you want to understand the crypto market, you have got to read Matt Levine's story. It is the whole issue of Bloomberg Business Week. I am obsessed with it.
Oh, and we are certainly glad he's going to be joining us a little bit later in the program. And then what happens when the consulting giant McKinsey & Company come to town? This all in a new book. We speak with the authors.
So looking forward to this. All right, let's get to it in just a moment. But first up, we're going to check on that trading day and Charlie Pellet. Giselle, Tom, do you think it's an indicator?
I think I've got to make some plans this weekend. We have got the Dow, the S&P, NASDAQ. My wife listens. We've got the Dow, the S&P, NASDAQ, all pushing higher right now. Best level of the day right now on the S&P, up 80 points, gain there of 2.1%. We have got the S&P on track for a winning week, up by 3.6%. The Dow up 751, up 2.4%. NASDAQ right now up 253, higher by 2.4%. Developing story today, one we will be following throughout the afternoon. Sources tell Bloomberg Blackstone, Apollo Global Management, and KKR are among private equity firms that are facing a Justice Department investigation into whether they influence boards across corporate America in ways that violate antitrust laws. The 10-year yield 4.01% right now, with the 2-year at 4.40%. Spot gold down $22 the ounce to $16.41, a drop there of 1.3%. West Texas Intermediate crude down 1.7%, $87.52 for a barrel of WTI. ExxonMobil and Chevron amassed more than $30 billion in combined net income as politicians blast big oil for raking in massive profits at a time when consumers are struggling with soaring inflation and energy shortages worldwide. But are the gains for oil companies sustainable? That question this morning for Ellen Wald, Senior Fellow at the Atlantic Council.
The question is, are we going to see more than, say, $20 or $24 billion in CapEx investment this year from Exxon? And Exxon's one of the companies that actually is increasing production. They've increased production in the Permian. They're doing a lot of work in Guyana. They've made a lot of great discoveries there. And they really have a potential, I think, and the mindset to really go out there and do a lot more investment.
After earnings, ExxonMobil up by 3%. We have got Chevron up 0.9%. BP, the ADR, is down 0.8%. EOG Resources down 0.7%. Pioneer Natural tumbling by 2%. Recapping stocks higher. S&P up now by 2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I heard nothing about the Tom and Giselle market indicator. All right, all right. We'll have to wait. Maybe Charlie will come in on that later. All right, let's get to the Market Drivers Report. Let's set your Business Week agenda on Yes, Can You Tell It's Friday? And what a week it's been. Vince Signorella, global macro strategist at Bloomberg News. He is out there via Zoom in White Plains. How are you?
Okay. Somehow I doubt Charlie's wife is really listening, but if she is.
You never know. They show up, those spouses show up at funny places. Talk to us about the trade today. I find it fascinating. Amazon just falling off a cliff. Apple is not. Apple, such an important part of the overall market. 7% of the S&P 500, 14% of the NASDAQ 100. What do you make of the trade today, Vince?
Yeah, Apple's probably, at last look, was 22 of the S&P points higher today. This is just a major tech squeeze from what everyone's telling me, that it's been hit so hard over the last few weeks. We had some really kind of almost Goldilocks numbers yesterday with GDP outperforming and yet the price index dropping more than expected. And something a little bit reversing that today with the employment cost index. Prices remain firm, and that's why we're seeing yields higher. But an interesting break of the inverse correlation between the dollar and the S&P 500. They have been moving in opposite directions from March to just about yesterday, and now that's broken. So the crutch for trading is gone. We'll see if that continues. I think we're seeing a higher dollar because of higher front-end yields, and equities higher because the growth picture is just looking a little bit better.
Even with Amazon coming out and saying we are going to miss when it comes to our fourth quarter top line, because of the American consumer, because of the global economy, Vince?
Yeah, I honestly don't know that that's the biggest surprise in the world. We've been seeing consumer spending more and more now relying on credit card, revolving debt.
You've been talking about this for some time.
I've been talking about this for months. I mean,
yeah, I know.
It just keeps going. I mean, savings are down, income is down, disposable income is down vis-a-vis inflation, much higher, and just not buying the same amount of goods. People are changing their purchases. And so it's not a shock to me that Amazon sales would slow going into the fourth quarter. I think, though, we'll see risk continue to be bid. I really don't see the Fed doing much beyond November. The way the numbers are looking, home sales in September.
What do you mean you don't see the Fed doing much beyond November? What do you mean?
So nothing in December?
I don't know that they'll do nothing, but I don't think for a second they'll do 75 basis points. It's just not needed. Home sales under contract dropped 30%. on a month-over-month basis today. This is really starting to go through the economy. The Fed needs to give it time to work, and they're guns a blazing, just going forward, not giving the economy a chance.
But those PCE numbers show that the Fed still has a lot of work to do.
Yeah, but look at the numbers yesterday. With the PCE numbers were down, so there's a little conflict in prices. The Fed has a lot of work to do, but they don't have to do it all at once. You know, it takes time for these moves to go through the system. They need to give it a little chance. The Bank of Canada blinked a little bit the other day. The ECB blinked a little. We've already seen the RBNZ blink. I think it's time after November for the Fed to do the same.
Having said that, I love that you said Goldilocks. Cecilia Rouse of President Biden's economic team yesterday kind of saying how it looks like, you know, kind of easing some of the inflationary pressures, but there's still growth out there. And I do wonder, could it possibly be, Vince, that the Fed somehow does engineer this slowdown in inflation, bringing in inflation without totally messing up economic growth?
Well, that's still going to be the tricky part. I mean, they've never really managed to do it before in the last 40 years or so.
Yeah.
There's a chance. There's always a chance. I think if they absolutely will slow down after November, I think there's a very good chance because the economy will get a bit of a lift. I think if we see front-end yields come off, we'll see the dollar come down. That's going to be amazing for earnings in the first quarter for large caps. And that could easily continue, you know, as a little bit of a catch-22. That lifts the large caps, that lifts the equity market, people feeling better about the economy, inflation starts to come down, and you get the soft landing the Fed's looking for. If they keep going 75, and pushing, they're going to push the economy over the edge and cause a recession. And then they'll have exactly what they don't want, which is stagflation.
Do you think, God, man, it was such a full week, and next week is too. We've got a jobs report, we've got a Fed meeting, right? Do you think the Fed starts to give indications of slowing more significantly next week? And just got about 30 seconds, Vince.
Going to be a tough call. I would love to see them do it.
Yeah.
Maybe even just saying the housing market's really been affected and our job is really starting to show up in the economy. I think that would do it.
Are you sure the rally's not because of Tom and Giselle being back on the market? I've got a theme today. I'm just going to stick with it. No, I'm just kidding.
Okay, go for it.
Vince Signorello, thank you so much. Really some great analysis on today's trade, today's rally. But let's not forget, I mean, it was a jam-packed week, and it's going to be another one next week. Vince Signorello, global macro strategist at Bloomberg News via Zoom from White Plains. I'm going to drop it. I'm just kind of a little obsessed.
Meaning drop it like you're not going to keep talking about it, or you're going to keep talking about it?
I can't believe they're divorced already. But of course, you know, you never know.
You know, I haven't read in on it.
Yeah, well,
I don't know the details.
Work on that. It's not going to be on the Bloomberg quiz, that's for sure.
Let's get to world and national news. Nancy Lyons will save us. She joins us from our 99.1 newsroom. Hey, Nance.
Thanks, Tim. Well, House Speaker Nancy Pelosi's husband, Paul, is still in the hospital after a violent break-in at their San Francisco home. Police Chief Bill Scott says his officers were called to the home for a wellness check early this morning and walked in on Paul Pelosi and the suspect.
Our officers observed Mr. Pelosi and the suspect both holding a hammer. The suspect pulled the hammer away from Mr. Pelosi and violently assaulted him with it. Our officers immediately tackled the suspect, disarmed him, took him into custody, requested emergency backup, and rendered medical aid.
Scott says the suspect has been charged with attempted homicide as well as other crimes. President Biden and Vice President Harris are making a rare joint appearance tonight to campaign in Philadelphia just 9 days before the midterm election. Bloomberg's Anne-Marie Hordern reports Democrats are trying to hone in an economic message with inflation still running hot.
Their argument is that you cannot leave it up to the Republicans in terms of making terms of the next few years and what that would mean for the economy. And they're really trying to tout the legislation they've got done, the Inflation Reduction Act, and of course last summer the Hard Infrastructure Act, where they worked with Republicans.
Well, for Republicans, Bloomberg's Anne-Marie Hordern reports the message has not changed. Inflation is at a 40-year high and crime is on the rise. Rock and roll pioneer Jerry Lee Lewis has died at his Tennessee home at the age of 87. The Louisiana-born piano player made it into the Rock and Roll Hall of Fame in its inaugural class. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much, Nancy Lyons. Well, the Bloomberg Big Take is now a daily podcast and a radio program hosted by Wes Kosova. He is taking a daily look into one big story, one big issue of the day, and today the defining conflict of the streaming TV era pitting HBO against Netflix. It's all detailed in the upcoming book, It's Not TV, written by Bloomberg's own Felix Gillette. Here, Felix and Wes talk about the days when the two media companies actually worked together.
Netflix bought a ton of DVDs from HBO because people wanted to watch The Sopranos, people wanted to watch The Wire, people wanted to watch 6 Feet Under. They wanted to binge them on DVD. They wanted to get, and they would get them through Netflix. And so Netflix was a great customer for HBO.
All the shows you just named, they were all HBO. They were the place to go outside the Hollywood system. We didn't have all these independent content creators yet. It was kind of, HBO was the Goliath. When you saw that staticky screen and you heard that signature intro sound that they played, that sort of you like knew you were in for something good.
Yeah. And then there's this amazing transition where, Netflix decides, you know what, there's this new technology. We can send programming right into people's homes via streaming. You can click a button, your show will start playing. You don't have to wait for the DVDs to come in the mail. And they launched a streaming service. And what are they going to put on there? Well, one thing they really wanted was for the streaming service was those HBO shows, because they saw it in the data from the DVDs. And HBO, the executive said, you know what? We're not interested in letting you have our licensed content for this new service.
That is just a piece of the Bloomberg Big Take. You can get it every weekday morning wherever you download podcasts, and you can hear the full show every night at 11 p.m. right here on Bloomberg Radio. You're listening to Bloomberg Business Week, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are holding close to session highs. The Dow, the S&P, NASDAQ 100 index all rallying on this Friday. What a week it has been. Lots of earnings. In fact, earnings helping send stocks higher today, at least from Apple. Apple up now by 7.9%, but heading the other direction. Amazon.com, that stock lower now by 7.7%. A month-long bounce from bear market lows is gathering steam as Apple's earnings help tech shares salvage their week, and a smattering of economic data suggests a modicum of progress is being made in the Fed's war against inflation. The NASDAQ 100 index up now by 2.8%. The NASDAQ Composite Index up 2.5%, higher by 266 points. The S&P up 82. That is a gain of 2.2%. The Dow Jones Industrial Average up 768 points, up now by 2.4%. 10-year yield 4.00% with a 2-year 4.40%. Spot coal down $21 the ounce to $16.42, down 1.3%. West Texas Intermediate crude down 1.3% now, 87.98 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on YouTube, on Bloomberg Quick Take, and of course in our Bloomberg Interactive Brokers studio here at New York headquarters of Bloomberg. And yeah, Charlie breaking down some of the big earnings, including Amazon, which, as you know, as we've been reporting, shocking Wall Street, projecting the slowest holiday growth quarter in the company's history. We've seen the stock plunge big time last night, and the trade carrying over into the regular day today. Amazon's market value set to fall below $1 trillion after its disappointing earnings report. So let's get to it with our own Matt Day.
Matt Day is technology reporter for Bloomberg News. He joins us via Zoom from Seattle. Matt, you've had close to 24 hours to dig into this, to report on this. The slowest ever growth for the company's holiday quarter. I mean, that's the part that really sticks out to me. What is it? Is this more of an Amazon story? Or is it more of an economy story?
I think it's both. Amazon's been trying to rein in costs all year. The last report showed they didn't really do that. And I think B of A analysts this morning, I think it was, who sounded the alarm and said, listen, if Amazon is projecting this week a holiday quarter that could grow as low as 2%, then we might already be in a recession. That on its own is an indication that, it's not just an Amazon story, but something's going wrong in the wider economy.
Having said that, what are, though, the Amazon-specific issues? Because there are some, right?
Oh, there are, yeah. When the pandemic hit and everybody, went home and started shopping online for everything by choice or by need, Amazon started spending huge on new warehouses. They were still building new data centers for their cloud computing business. And that worked out for, call it 18 months. Late last year, when demand started to dry up, they realized they had way too much space, way too many people. And so they've been in cost-cutting mode basically all year long. We've seen recently that spread to their corporate ranks as well. They're starting to wind down some of their marginal products, stuff that they didn't think was going to make it big. They've shut down their telehealth service. So they're still, investing for the long term, as Amazon likes to remind folks, but they definitely overbuilt based on what they saw in 2020 and 2021.
What about that profit engine known as Amazon Web Services, AWS? What did we learn about the company in terms of how cloud growth is doing, especially in the context of what Microsoft reported earlier this week?
Yes, Microsoft gave a warning, and Amazon gave maybe an even bigger one. 27% growth is great for a business that prints money, but it is the lowest ever since Amazon began breaking out AWS back in 2014. And one worrying thing for analysts on the call yesterday, now Amazon CFO said that some customers were asking for help cutting their bills, and some pretty dour chatter about what businesses were doing with cloud spending. We didn't hear much of that at all during the pandemic. Cloud spending held up really well, so this suggests that this is something new for AWS.
Wait, am I crazy in thinking that we could be talking about Microsoft right now? Didn't Microsoft essentially say the exact same thing?
Yep, exactly right. And that's enough to compound the worry about a business that, people have been saying is going to grow forever, and throwing out a bunch of ludicrous figures on exactly how profitable it's going to be for Microsoft and Amazon. Amazon said they started seeing a lot of softness in their enterprise customers in the second half of third quarter, and then it's continued this quarter.
You know, it's interesting too, and I know you wrote and reported earlier that, you know, we did see actually shares of Amazon and the market cap go below $1 trillion. Amazon shares, though, trading definitely off their worst levels of this session. In fact, it's just the biggest drop since May of 2022, so it's not like we haven't seen it in years, if you will. So how do you, I don't know, how do we spin this forward, Matt? How do we need to be thinking about this? Because I got to say, and I keep saying to Tim all week, you know, my world is I'm ordering on Amazon, I'm watching Amazon Prime, I use lots of Apple products, and I Google everything. So, like, that's my world. So these three companies, you know, and Amazon in particular, is so entrenched in our worlds, or many of our worlds.
Yeah, long term, Amazon's probably going to be fine. They're not going to go out of business. You know, some analysts this morning are, you know, trying to calm that 25% drop we saw after hours last night. You've seen it bounce this morning, as you said.
Yeah.
Their advertising business is still growing. They're probably still going to take share there because they're just so close to people's wallets, right? You know, Google and Facebook have an idea what you buy. Amazon knows exactly what you buy. So their ad business is still a bright spot for them. Cloud growth, even if it's only 27%, that's still a very lucrative business. That's got a long way to go. The long-term outlook is okay for them as long as they can get their costs under control.
Where are analysts most bullish when it comes to what Amazon can do? Is it that ad business? Because, I don't know, I mean, do Apple's IDFA changes affect that? It doesn't seem like it's a similar type of ad business because people, you know, are going there searching for what to buy, and then they buy the product that they search for.
Yeah, exactly. Definitely a different story than kind of the gut punch to Facebook that change was. Yeah, ads is definitely a spot people are real optimistic about. Cloud is too. I mean, you've seen Amazon trade much more like a tech stock than a retail stock in the last, really, since they reported AWS results for the first time in 2015. So cloud's another obvious area where people are really upbeat. And I think in the long term, people still think that, you know, their retail business can show profits more than they have historically, right? Once they get it right.
Matt, is there at some point we look at these companies that, you know, I mean, Amazon for a long time, right? We were just waiting for it to turn a profit, and there was a lot of investing, and finally it did. But at some point, what we consider maybe growth companies, all of a sudden, they still grow. They just don't grow at the dramatic rates. They become these behemoths, you know, in their industry, and moving the needle gets harder and harder. Is that fair to say, or maybe not?
I think it's definitely something worth watching for Amazon now. Like, have we hit peak Amazon? Was kind of the crazy growth we saw during the pandemic enough to call it and say, listen, this might be a different company now? One of the signs of that yesterday, analysts were asking on the conference call after earnings when Amazon might stop investing in new data centers. That is a crazy bit of caution and a suggestion that they should slow down growth on, you know, it's thought to be a potentially $1 trillion market opportunity, right? So definitely some caution out there.
Right, everything. And I think about what Mike McKee talked about, like, was it some distribution facilities that was in the latest growth data that you're not seeing as much of it happening. So you do wonder about this, right? Yeah. The retrenchment. Hey, Matt Day, thank you so much. Matt is technology reporter at Bloomberg News, joining us via Zoom from Seattle. Quick check on shares of Amazon. They are definitely off their lows of the session, just down about 7.5%.
And a big headline coming through, Elon Musk saying that Twitter is going to form a content moderation council. So we'll have to dig into that in just a few minutes. You're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
40,000 words. What does it get you?
A really, really cool piece about Bitcoin and all of crypto.
I said, so many times. Like, it's like light bulbs were going off in my head.
Well, that's the idea here.
I know.
Yeah, Matt Levine all over it.
I'm still not sure about the future, though.
That's why we're going to talk to Matt about it.
All right, it's a complete issue of Bloomberg Business Week that's devoted to crypto. We're going to get to it in just a moment. First up, though, back to the trade and Charlie Pellet.
Hi, thank you very much. Do want to touch on a story that you guys mentioned a couple of minutes ago, worth repeating. Elon Musk saying in a tweet that Twitter will form a content moderation council that includes, quote, widely diverse viewpoints. Musk saying no major content decisions or account reinstatements will happen before that council convenes. Stocks are pushing higher. I'm looking at the GIP chart that we run on the Bloomberg to track the daily chart, and we've got very close to the best level of the day. In fact, the best level of the day right now on the S&P, up 82 points. That is a gain right now of 2.2%. The Dow Jones Industrial Average up 757 points, now higher by 2.4%. NASDAQ 100 index full of big tech names. They are both rallying today. We've got the composite index up by 2.5%. NASDAQ 100 index up 2.8%. A lot of this having to do with Apple today out with earnings last night. Shares up now by 7.7%. Amazon with earnings last night. That stock plunging, selling off now by 7.5%. Amazon shocking Wall Street, and it is now projecting the slowest holiday quarter growth in the company's history. ExxonMobil and Chevron amassed more than $30 billion in combined net income, $30 billion, as politicians blast big oil for raking in massive profits at a time when consumers are struggling with soaring inflation and energy shortages worldwide. ExxonMobil shares today, they are higher by 3%. Chevron up now by about 0.8%. Briefly after earnings, Pinterest shares, they're up 10.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie. Well, for just the second time ever, an entire issue of Bloomberg Business Week magazine is dedicated to a single topic from a single writer. You might recall Paul Ford's What is Code? That was the first. Well, this time around, it is Bloomberg Opinion's Matt Levine, giving us 40,000 words on digital assets, a primer on the innovation that could forever change the way we transact and how we view the world of finance. It is called The Crypto Story, your guide to what it does, what it means, and why it still matters. Matt, as you know, covers finance. He was an editor of Dealbreaker, an investment banker at Goldman Sachs, an M&A lawyer at Wachtell Lipton, a clerk for the U.S. Court of Appeals for the Third Circuit. He joins us via Zoom from New York City, and he joins us along with the editor of Bloomberg Business Week magazine, Joel Weber. He is in our Interactive Brokers studio. Joel, we want to get to Matt, but tell us a little bit about how this all came to be.
Earlier in the year, over the summer, we started watching crypto winter unfold, and we started to have several conversations that led to a big conversation where it was like, hey, what are all the various things we want to try and put in motion sooner rather than later? And out of that little huddle on the afternoon of June 17th, in the middle of that meeting, actually, the number one thing that everybody wanted was, how do we get Matt Levine to write something about crypto? And so I wrote in the middle of that meeting this note, hey there, to Matt. Hey there, any chance you'd like to write like 20,000 words for us sometime this summer? Could go approximately 18,000 words, shorter or longer as you prefer. And built into that was this insurance policy that maybe if I couldn't get 20 or 40 or 60, like maybe I could get 2,000. And it took him about a week to reply. And in typical Matt fashion, he said, I have not replied to this. Sorry, because there is some chance. Like, it feels like a bad idea, but I kind of want to. What were you thinking? So that flirting led to where we are now. We have this amazing issue, which is totally just a testament to Matt. And he and I were talking earlier this week look, we all adore Matt. We love his newsletter. We love money stuff. His Elon coverage has been sensational. And had any of this madness with Elon transpired any sooner, I don't think Matt would have actually done this. So thank you for not having that chaos. But Matt, what was the thing when we started flirting? What was the thing that you felt was the spark that made you want to do this?
I mean, the thing that I really wanted to do is that, crypto feels like a big enough subject that it could support an entire magazine issue, but it's also like a small enough subject that it feels like one person could almost get their mind around all of it and then type sequentially an explanation of all of it. So you can sort of start from the first principles, and there's a real obvious starting point where the Satoshi Nakamoto Bitcoin white paper is hey, I've got this idea for crypto, and then everything more or less comes out of that. So you can kind of start from the beginning and build from the basic concepts up to all of the complicated stuff that exists today. And that just seemed like a really fun challenge to try to cover everything. And of course, in the end, long though it is, it doesn't cover everything, but it felt like a good thing to try.
So the title, it started as me saying, what is crypto, which was loosely inspired by the Paul Ford thing. That was the closest approximation that I could come up with. What was your title, Matt, and why?
I wouldn't say I had a title. I had a working title.
There
I had
you
a
go.
half-joking working title, which was, what was crypto? Because we were sort of joking about the fact that in some ways, it feels a little silly to do this during crypto winter, although actually, I think that ended up being helpful because you're not kind of covering the market moves of the moment, but you're kind of taking a step back and looking at the sort of broad sweep of crypto.
What's kind of cool is, I have to say, Matt, loved it. I've read it. I've had to reread things a couple of times because I feel like, though, for the first time, I understand so much of crypto, and I realized how many things I probably was either using terminology wrong, and I just didn't have an understanding. So thank you for that. And I do think in terms of crypto, love it, hate it, you write, in the past 14 years, crypto has built a whole financial system from scratch. Whether it works or not, that's kind of cool, isn't it?
Yeah, I mean, as I say in the piece, I come to this from finance, and my interest is not so much in we're re-engineering the internet and society. My interest is they do cool financial stuff, and I think that for me, watching crypto has been fascinating because it's a mix of very clever, essentially financial engineers and engineers who are looking at the problems of existing finance and saying, we have a better idea. But also watching people who sort of are 23 and know how to program a computer and have never heard of the 2008 financial crisis and are just doing it all over again and making the same mistakes in kind of hilarious fashion. So you get both, right? You get real clever financial innovations and also disasters you can see coming a mile away.
So let's talk about some of the financial innovations before we talk about some of the disasters. To what extent have you seen the financial innovations actually make their way into the traditional finance system, if at all?
Not too much. You see banks announcing we're going to do a blockchain project, right? And every time I make fun of that, I get an email from someone at a bank being well, we actually deployed a test example of our blockchain product. But in general, I don't think that the innovations of decentralized finance have come to a stock exchange near you. But what you have seen is people from traditional finance leaving to go to crypto. Now, that was largely a feature of the crypto bull market, and some of them are kind of creeping back to traditional finance now. But I do think it was also a testament to the interestingness of that, where if you felt you were you wanted to build stuff in finance, or you wanted to you saw a problem in the existing infrastructure and you wanted to make something different, the place where that was easiest to do, where you had the blankest canvas, was in crypto. And so a lot of smart people did leave their hedge fund or high frequency trading jobs to trade crypto instead. So it's not so much that crypto took over traditional finance, but that it kind of hired away from it.
Okay, so the first time I got to read the draft was in early August, and Pat Rignier, who's the story editor, actually cracked it before I could get to it, but he immediately flagged what was the first line, and I think it has not changed since you filed it. And that first line is, modern life consists in large part of entries in databases. And what was magical to me about that was that we're gonna end up with a story, 40,000 words about crypto, and you don't start there. You start somewhere else. And can you share how that line came to you and why you thought that was the perfect place to begin?
Well, I think that if you're going to take crypto seriously, you have to sort of start with like, what problem is it meant to solve? Like in some ways, I say I want to start at the beginning and go to the end, but you have to start before the beginning, right? You have to start with like, what is Satoshi Nakamoto sitting around thinking about in 2007 that inspires him to write the Bitcoin white paper, right? Like, why have crypto? And I think that the answer has to do with like, one, the sort of computerization of the world, where it's like easier and easier to kind of see that so much of life consists of like data structures. And then also with this like breakdown in trust, where, as I say, like the world consists of a lot of entries in databases, and you have like real pressure on trusting the keepers of the databases, right? You have real worries about, in 2008, you had real worries about banks. And that's like the sort of like immediate impetus for Bitcoin, right? You don't trust the bank to keep a record of your money, not so much because they're not trustworthy at doing that, but because you sort of don't trust them generally, or you don't trust the system, you don't trust regulation. And that kind of ramifies into a lot of other places where you don't want to rely on some single party. You don't want to rely on Facebook to kind of keep track of the social graph. And so that I think is like kind of the spark for crypto in many ways is saying like, if we come up with a better way to keep a database that doesn't rely on trusting centralized parties, then that's good. And that's kind of, I wanted to start with like what motivates this rather than like, blockchain.
Well, I have to say, like, this whole idea of trust, I love how you kind of wove it through everything, right? Like, I throw money in a bank, I expect it to be there. I invest money in my 401k, I expect it to be there.
Well,
but
the 401k thing isn't really working this year.
It's not.
Sorry.
But I mean, it's like digital, right? Like, I have no interaction with the people who are really, covering it for me. There's so much trust when it comes to crypto. I keep thinking about, like, who are these people? Why should we trust them ultimately? And I understand that if the system doesn't work, then nobody's going to be wanting to participate in it. But I feel like we still don't know these people, you know what I mean, that are behind it. How do you feel about it, having kind of broken it down?
Well, you don't know Jamie. Maybe you do, but I don't know Jamie Dimon personally either.
I just had lunch with him. No.
Right. Like another reason I wanted to start there is like to convey like just like the strangeness of trust in our everyday life that is sort of like, I wanted to defamiliarize that a little bit and be like, look, your whole life is databases and you trust the people who keep them and like you don't think about it, right? Because like that's just true in the world. And like you have to like think of the reasons why you trust the keepers of databases. And some large part of that is like there's this regulatory structure where like we sort of trust the government not to let people do crimes with our money, and then other parts of it are like relying on market incentives where like you can kind of like look at a company and be like, well, if this company was stealing people's money, it probably wouldn't be advertising on the subway because people would stop giving it their money. You're sort of like relying on other people to kind of do the investigation for you. And in crypto, like it's the same sort of basic set of things, but the mix is different, right? So in crypto, there's in round numbers, there's no government regulation, right? I mean, there's actually a lot. There's a lot of people doing a lot of things to regulate crypto. But like any given project that you look at in crypto, there's some chance that no regulator has thought about it, right? And they've certainly not like approved it. Certainly there's not legislation being like, here's the steps you need to take to become a stablecoin in the U.S., right? I mean, like there's prospective legislation, but there's not like a real kind of like working regulatory framework. And so, in much of our lives, we trust, people because there is a regulatory structure around them, and here there isn't, and that's weird. And in many cases, makes things less trustworthy. And so we saw in the crypto meltdown a lot of like customer-facing brokerages, kind of like lost their customers' money because they were sort of doing very levered trades without telling anyone about it. There's the market incentives thing, which in crypto is a big deal, right? Like you sort of go around thinking, well, if this is a big crypto exchange, it's probably trustworthy because everyone else is trusting it, right? And that as a heuristic, that's not terrible, but it has, in the past, the biggest Bitcoin exchange at the time has blown up. So it's not a perfect heuristic by any means, nor is it in traditional finance, right? Big banks have blown up. And then the third thing in crypto is like, there is this notion that like, not in all of crypto, but in lots of crypto, in the core of Bitcoin and in like decentralized finance, there is this notion that you can look at the code yourself, that everything is verifiable yourself. You can look at the code, see how it works. You can look at the ledger of transactions, the blockchain, and prove that every transaction is correct. And so you said you don't have to trust. You can verify everything without trusting it. In practice, you're not doing that because it would take forever, but you are you're sort of trusting the fact that you could do that verification, so you don't have to have as much trust in individuals. But that's not like the only thing in crypto. I mean, like crypto evangelists will talk about that being like the trustless nature of crypto. But obviously, like day to day, a lot of stuff in crypto involves trusting, companies and like individuals with your crypto, and often those people turn out not to be trustworthy.
Yeah, we could do an entire program on talking about the history of crypto and the grifters or alleged grifters.
Colorful characters.
Colorful characters, exactly. Yeah. We're speaking with Matt Levine. He's a columnist for Bloomberg Opinion. He is the story is his in a Bloomberg Business Week magazine this week. If you haven't read it yet, I think you're the only one. It is on the Bloomberg terminal.
Untrue.
It's a lot of words to get through. Yeah, 40,000.
Okay, if you haven't started reading it yet, you might be the only one. We also have Joel Weber, the editor of Bloomberg Business Week, with us in the Bloomberg Interactive Brokers studio. Matt, I want to hear more about your perceptions and conceptions of crypto before going into this versus after doing the reporting and writing. Like, you must have gone in with some sort of notion, and I'm wondering what that was and if it changed by the end.
I wouldn't say it changed too dramatically. And part of, I don't come to this story with an angle in the sense of like, I'm a crypto booster or I'm a, crypto hater. And I kind of felt like that was the only way to do it, right? Like, I feel like I read a lot by crypto boosters that is very enthusiastic, but like very kind of in the weeds and jargony and sort of assumes you're already a believer. And I read a lot of stuff by skeptics that is just angry. And I wanted to sort of find a middle ground. But like, I do come to it from the perspective of I am a financial writer and I'm most interested in the crypto financial system. And so in writing this, I found myself often charmed by the crypto financial system and by like the cleverness of like what people were doing in decentralized finance, and by the enthusiasm of people who work in crypto finance, not just about like making a lot of money, but about how someone said to me, things just work in crypto. Like you just like, if you want to like start trading stuff, you like plug into the exchange and you start trading this stuff. And in traditional finance, there's a lot more like process, right? There's a lot more like you like call a bank and they send you a contract so you can sign up an account, and then like, you have to like call someone else to like hook up your data to the exchange. And it's just like a more manual, complicated, subjective, process where like insiders sort of get more access. And in crypto, everything is sort of straightforward and computerized. And that's like what people told me. Like that was the thing they liked, that they could sort of start a product, start trading something, come up with an idea and implement it without like sort of getting anyone's permission. Obviously there's a flip side to that, which is that like you don't get the regulator's permission, and sometimes the product is like, theft. But that was a thing that like, I was struck by people's enthusiasm for that, because I think that when I was, when I've written my column about crypto, I've often thought of crypto as being, people call the blockchain a slow database. And I think of it as being a sort of like a difficult to use system in some ways, because it is unintuitive to outsiders. But I think when the people who use it find it so much easier to use than traditional finance, because it is, kind of like disintermediated and permissionless, and just like you can like read the documents and then go do the thing.
So Matt, haters are going to hate, and crypto haters will ask, sure, 40,000 words. What's crypto for still?
Yeah, look,
ever,
I mean,
right?
I don't like I share that skepticism. You know, like I like there are like people tell stories about how crypto is changing or will change your day-to-day life, and I often find those stories not particularly compelling. Right? There's a lot of like, you could own a share in the bands you like, and then if those bands become popular, you'll get rich. It's like, why? What? Like, how is that a thing? Or like, you know, you can like own your data on like your social networks, and you can get paid to serve ads to you. Like, it's like these stories of sort of like micropayments and of like ownership, like sort of financializing everything that. You know, like I'm a finance guy. I like that. I like a certain amount of financialization, but I also like spent a long time reading about like, we're gonna like sell equity in college students so that you can like bet on their futures. And like, you know, now I'm like, okay, yeah, people are gonna keep writing that. It's never gonna happen, right? Like there are some things that sort of resist financialization, and crypto is like, we're gonna financialize everything at once, and that seems implausible to me. So in that sense, like I am like I think there's you know potential like stories like that will come true, but I'm not super bullish on like we're gonna have a coin for everything that you do in your life.
Matt, let me just ask you, because you know we lost what, $2 trillion in crypto wealth, right? That happened, and yet, as you point out in the magazine, you know it's not like the rest of the financial market. Costs of that. So what is the meaning of it? You know, what does that say about the future in terms of the value of crypto and that? First of all, we're glad it didn't bring down the markets, but I mean, what does it say about its real value going forward? Or maybe it doesn't, I don't know.
Yeah, I mean, I do think that, I mean, first of all, we lost a lot more than $2 trillion of stock market wealth, you know, this year. Like,
right.
Like, you know, like crypto, whatever else it is a very speculative asset class, right? Like people who invest in crypto, for the most part, are like, this is a fun gamble more than they are like, this is where I'm putting my life savings because it's like going to promise me a steady 2% return. So the fact that it crashed, you know, people who were betting on it going up, it went down, but they could sort of afford to take that loss because it was essentially a speculative asset. So that's one reason that it didn't really like ramify to the rest of the economy. But the other reason is definitely that like you're not, you know, financing your home or your, you know, your business by like going to the crypto lender. And so crypto is not super integrated into like the financing of real world activity. So it is, you know, when it crashes, it's not like the crypto bank shuts down and you can't get a mortgage for your house.
Right.
Like you can still go to the regular bank. So yeah, I mean, I think I've said that like to like, if the next crypto financial crisis, because there really was a crypto financial crisis this year with like failing, you know, lenders. If the next crypto financial crisis causes a slowdown in the real economy, then you'll be like, oh, crypto arrived. Like crypto is now like meaningfully integrated into everyone's lives such that when it crashes, that affects the world. We're not quite there yet.
So Matt, you know, we do this every week. I'm wondering what's your next single topic issue takeover of the magazine, and what kind of deadline I can give you now that we've done this once.
You're taking your crypto and running.
Well, you know, I'm gonna do a retrospective on Elon Musk.
Yeah.
Oh,
all right. I'll go grab my catcher.
Really. Never gonna write about it again. Yeah, I'm gonna write about it again.
Why not, Joel? I mean, I guess the question is kind of where the story goes from here, Joel.
To me, that is the most interesting part about crypto, right? And I won't even pretend to know. And that wasn't really the goal of the project. Although I think Matt poses some really, and I don't want to give away the ending because it's a really majestic way that I think he wrestles with this question. And boy, I will just say, having been editor of Business Week for a while, worked at Bloomberg for 10 years, it's just like this story makes you just want to get a bowl of popcorn, read the issue to make sense of everything that we've all lived through, and also just keep eating that popcorn to see what happens. Like I'm really deeply curious, and that was the curiosity that I think Matt infused into this story. And I mean, we're just honored to have published it.
Matt, you should know, and Joel, you should know that in the newsroom, people have been hunting down for the issue. We typically,
I'll have them. It depends how much Bitcoin you've got to give me, but yeah.
But I'm just telling you, everybody wants the issue to read, and it's like we've been like, do you have the issue? Do you have the issue? Matt, thank you so much. I really mean it. Like, I've learned so much, and I think everybody who reads it does. It is called The Crypto Story: Your Guide to What It Does, What It Means, and Why It Still Matters. Written by Bloomberg Opinion's Matt Levine. Check it out. As we said, it's the entire issue of Bloomberg Business Week magazine. And our thanks to Joel Weber, editor of the magazine, who
I guess you had something to do with it, Joel.
Small. Matt and Pat get the most props.
Well, Joel, thank you for joining us. Joel Weber, the editor of Bloomberg Business Week, with us in the Bloomberg Interactive Brokers studio. Coming up next, we're checking in with our TV colleagues for our Countdown to the Close.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, but 60 minutes left in your trading day, your trading week. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stedovic. We welcome across TV, radio, YouTube, Quick Take, a moment to take stock of what is a pretty stellar week for the benchmarks across the board. The fact that we're up more than 2% across the benchmarks is one to look at, Carol.
Yeah, absolutely. And it's interesting because we've got a really jam-packed full week next week, and yet investors very enthusiastic. One thing I've been noticing is certainly a standout among the semiconductors, continuing to see that group move higher overall. It's up about 3.5%. Thank you, Intel, and doing some cost cutting, because that has certainly given a kick to the sector. Intel alone is up almost 10%. AMD also up about 5.3%. Intel up the most in about 2.5 years. And this group, the SOX, it is up about 11 to 12% since its recent low, Tim, on October 14th. So quite a move up.
All right. Well, you guys know I focus a little bit on underperformance. It's kind of hard to find, but you didn't do it, Carol, so I had to. Here it is, the NASDAQ Golden Dragon China Index down 3.4%. The reason I bring it in, though, is because it's been a really turbulent week. We did see some big days, up days, but at its worst, it was down 21% for the week. Now, if it were to close today at this point, it would be down only 11% this week. Concerns about Xi solidifying power, and also China continuing to ramp up fresh lockdowns and restrictions due to COVID.
And despite some of those global headwinds, the concern, and still front and center about what the Federal Reserve does next week, we are pushing higher, and it is a stellar week for the Dow Jones Industrial Average, best week since May. We're up 5.7% on the week. We're up 2.5% on the day. You're looking at a NASDAQ up 2.7% on the day, only up 2% on the week. It is the laggard amid some of those turbulent earnings. We're looking at 3.9% higher on the week for the S&P, and it's up 2.4% of the day. And Russell 2000, those small caps getting a good bid on, more than 2% again on the day, Taylor.
What a difference 24 hours makes. Take a look at the best performer today. It is tech and communication services that are up 3 and 4.5%. And boy, yesterday was at the exact opposite. Today remained everything in the green except for consumer discretionary, but really that's only off by 0.4%.
Yeah, that's right. I mean, this is pretty much a rally being aided by names like Dexcom, Intel, as Carol just mentioned, and of course Apple. Apple shares up 8% here on the day, setting up for what's going to be the best one-day gain that we've seen going back to the middle of 2020. And of course, all this comes despite a day where you have Amazon down 7%, having its worst day going back to May. But it all balances out here because you have an Intel up 10%, and you have something like Gilead Sciences rallying 12% here on the day. And I'm just going to check, because this is going to be the best day that we've seen for Gilead, I believe, going back to at least 2012 or so here. Not only was this about just the earnings overall, but this is really about some of the guidance here and the broader spectrum in that space. So there is a lot of pockets, if you will, in this market that are performing well. And I guess if you can find them and pick and choose them right, you're going to do all right.
You're right. The pop quiz says November 2012 remain.
I said that. I said late 2012. So I couched it a little bit. So that's November is late, right?
Yeah, I consider it late.
Just about.
Okay. Well,
I'm not giving up on this year yet, guys, even as we plunge towards November.
11 of 12.
Let's look at some underperformance.
Is Carol still there, or does she leave?
No, I'm gone.
Oh, okay.
She's in the metaverse. I'm looking at what we've just bid farewell, no longer a public stock for our trading, is Twitter. It is no contest, though. It has been an underperforming company versus the broad indices. Great chart coming from basically scaling us back to 2013. Normalized, we've done relatively well on Twitter, but it ain't nothing in comparison to the heady heights that we've seen on the NASDAQ performance. We've seen almost 300% levels in terms of where we've gone in the S&P. This, of course, is a stock that has underperformed, and now people wonder whether it's for the turning under a new CEO that still kind of takes us all by surprise.
An era is over. 9 years, right? Publicly held company, no more. Kind of wild. All right. I do wonder if an era is over for the current round of central bank policy. We've certainly seen, it feels like, a little bit of a dovish tone. Don't forget, we've got a Fed meeting next week. Electica Asset Management founder and former CIO Hugh Hendry weighing in on global central bank policy and questions that they are continuing to raise rates. It specifically talks about the U.S. Fed being in a fog when it comes to acknowledging a recession. Here's what he had to say earlier on Bloomberg TV.
The Fed is confronted with Fed fog. We're looking at Amazon's worst holiday sales ever, okay? And we've had 2 consecutive quarters of GDP decline, and the Fed saying, recession? What recession? This is a recession that's getting bigger and bigger, and that's the fog.
All right, that, of course, is Hugh Hendry, former CIO at Electica Asset Management. It'll be interesting. We're talking with Vince Signorella. I mean, there's a lot of folks out there that think it's time for the Fed to start thinking about dialing back. We'll see whether or not we get that in the meeting next week, Tim.
I mean, I have to just bring up jobs. You know, the last 2 months, we've seen more than 200,000 jobs added to payrolls. We're going to get jobs next week, too. So we'll see. Yes, it's backward looking, and there are concerns from companies like Microsoft and Amazon. But it's hard to say that we're in a recession when companies are still hiring. And yes, we are seeing belt tightening. Well, we certainly are.
In fairness, though, I mean, to that 200,000 jobs, I mean, I think that is the consensus for this latest report. But that would actually be the slowest, Taylor, that we've seen basically since the pandemic disruptions in early 2020.
Slowing when you think about where we're in the economic cycle.
But in a normal
Tim, I would
time,
just point out.
right? In a normal time, 200K would be pretty solid.
Agreed.
Yeah, I mean, as to Gina's point, Gina Martin Adams, she's always pointed out that a housing market will start to be a leading indicator. Inflation is always the lagging indicator. We're starting to see some cracks within that housing market, so maybe that's some of the signs of the cracks that roll over, and it just takes some time to filter out into other sectors.
Yeah, it's interesting the difference of opinion maybe among the asset classes today. The bond market feeling a little bit more hawkishness, looking at those PCE numbers, looking at the cost of labor, looking at some of the driving forces we've got in the data today, maybe thinking the Federal Reserve will still be going 75 and then some, whereas maybe the stock market's like, oh, after the races for whatever reason.
I mean, I just looked this up on the terminal because this morning when I looked at the consensus estimates for that jobs report, 200,000 was the consensus. That's actually come down now to 191. And when you look at a lot of the other economists that we've surveyed within that survey, they've also brought down their expectations over the last 4 weeks. So,
Ellen Zentner comes out with her note. She's at 180.
Yeah, so interesting how people are now revising downward on that.
All right, but the labor market, to Tim's point, it's been really persistently still holding on, and that is one of the standouts when it comes to, right, we always talk about it, like some of these weaker economic points, and we're like, but look at the labor market continuing to still kind of hold on and still show some growth, maybe not as strong as it's been, but still certainly charging ahead.
And what about that anecdotal evidence? Well, Twitter, we know, potentially laying off people. What have we heard from the likes of Amazon, of Apple, of, you know, the consumer resilience? Maybe they're worried about it going to the holiday period. We've heard of all these companies, not out and out saying we're laying people off, but we're stopping hiring. I wonder when that starts to hit the numbers a little bit more.
Yeah, I've been wondering that too. And some experts we talk to say that, well, for tech workers, it's so easy for them to get other jobs. So even though we hear this anecdotal data, every company is hiring tech workers still.
Didn't that market guy look like the actor from Love Actually?
Oh my gosh.
He's got a vibe.
Right? There's a vibe. It's a delayed moment. I was in the metaverse and then I had a delayed moment. All right, folks, we will be back in less than
How
an
many
hour.
times have you seen that movie, Carol? You watch that on repeat?
I'm not telling you.
No.
It's a good movie.
A Christmas,
it's a good Richard Curtis. You can never knock him.
A Christmas Story. Also, I watch a lot. All right, we'll be back in less than an hour's time. Radio, TV, YouTube, and Bloomberg Quick Take. I can't hear. I'm hearing static. I don't know. We're gonna be back with Beyond the Bell. We'll be back to count you down.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You know, I played that soundbite and I was like, wait, who is that actor? Have you ever seen Love Actually?
I have, but I don't know what you're talking about.
It's a great British actor, and
that's a very popular Christmas movie. Carol.
Yeah, the tarnished rock star.
We're
Richard
not even
Curtis.
at Halloween
Richard
yet.
Curtis. I think Caroline said it.
We're not even at Halloween yet.
I know.
We're already thinking about.
I'm already shopping.
Okay.
I'm moving on. You know, once you
Feels like fall.
once you don't have a little critter at home and you're not out there, you know, dressing up with them and doing Halloween, which Aggie and I used to do all the time, you're going to do it with your son. It's like you kind of, unfortunately, move on a little bit.
I know. I mean, it was the same way before we had a kid. We were like, okay, Halloween, we'll leave a bowl of candy out, and you know. What do you give to trick-or-treaters?
I go for stuff that I like a mixture of stuff. So there's some hard candy like lollipops and stuff. I do some chocolate. I like fun stuff.
Are you a
But I like a mixture.
Are you a
No
full,
apples, sorry.
Like, is the Masser household like a full candy bar household? You know those houses where you go when you were a kid and there was like,
Come on, these kids, it's
like,
sugar.
this is like $1, you know, like a full candy bar.
Did you buy candy?
We haven't bought candy yet. We need to.
No, I like the little guys. I think everybody wants a little bit of something.
Okay.
You know?
No, people want the full bar.
Do you want to know, changing times, do you remember we used to get, you won't remember this, anybody in the control room, used to get those little boxes of cigarettes and you blow on it and like puff.
We did have those when I was a kid, actually.
Oh, you did?
We
Right?
did, yeah.
It's like, come on. Like,
Yeah, now they have, you know, candy vapes. Just kidding, they don't.
Oh, okay.
That would be bad.
Candy CBDs?
Exactly.
No.
Not
All right, let's get back to world and national news. Some serious stuff going on, a lot going on, in fact. And Nancy Lyon has it covered in D.C. Hey, Nance.
Thanks, Carol. San Francisco police say the suspect in a violent attack against House Speaker Nancy Pelosi's husband is facing an attempted murder charge. Authorities say he used a hammer in the assault that took place in the Pelosi San Francisco home. The speaker was not there at the time. Bloomberg Washington correspondent Joe Matthew has more on what happened.
Doctors say Paul Pelosi will recover after being treated for blunt force trauma. The White House out with a statement saying President Biden called Nancy Pelosi after the attack and is praying for the whole family.
You can hear more with Bloomberg's Joe Matthew here on Bloomberg Radio at 5 p.m. Wall Street time on Bloomberg Sound On. Former President Trump says Twitter is now in sane hands, with Elon Musk finalizing his acquisition of the social media platform. Former Twitter employee Claire Diaz-Ortiz believes the sale represents the end of Twitter.
Without guardrails on a platform like Twitter or really anywhere on social media, you end up with hate, misogyny, conspiracy theories, and that's not positive for anyone. That's not Twitter for good.
Diaz-Ortiz says she's sad to see Musk in charge. He's already fired the CEO and several other high-ranking managers. Jerry Lee Lewis has died. The killer, as they called him, is probably best known for this rock and roll hit. You shake my home at the age of 87. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Carol Mass are live in the Bloomberg Interactive Broker Studio. Well, Bloomberg The Big Take is now a daily podcast and radio show. It's hosted by Wes Kosova, and it's a daily look into one big story, one big issue of the day. Today, the defining conflict of the streaming TV era. It pits HBO against Netflix. It's all detailed in the upcoming book, It's Not TV, written by Bloomberg's Felix Gillette. Here, Felix and Wes talk all about the early days of the streaming wars.
And so now you have this new player on the scene, and they have their own kind of signature look and sound that's immediately recognizable.
Yeah, and House of Cards ended up being a very seminal show for Netflix because it really put them on the map and established themselves as like, we're going to be a player in original programming, in prestige drama, the most expensive genre there is. And it was just kind of a fascinating moment. And that was really the start of this rivalry, HBO Max, Netflix. And what they anticipated did happen just in the past couple of years. Then you had the launch of Disney Plus, you had the launch of HBO Max, you now have Paramount Plus, you have Apple doing their own original streaming.
HBO Max, Paramount Plus, the list continues to go on. That's just a piece of Bloomberg's The Big Take. You can get it every weekday morning wherever you download podcasts, and you can hear the show every single night at 11 p.m. right here on Bloomberg Radio. Once again, that is detailed in the upcoming book, It's Not TV, written by Bloomberg's Felix Gillette. The other voice you just heard, too, is Wes Kosova, who hosts The Big Take.
It's a great subject for a time. Like,
I can't
you
wait
think
to
about
read this book.
At one point, HBO, right? It was, I remember Sex and the City, Sopranos, and then you had all the other streaming series really come into it. It's a very different marketplace, right?
It is, but it's in many ways the same now.
Why?
Different premium channels.
Oh, yeah, that's true. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We are just about the best level of the days right now with the Dow, the S&P, and NASDAQ all rallying. Let's head right over to the first word breaking news desk for today's afternoon call. Here is Jess Menton.
Good afternoon, Charlie. Stocks are surging today after what's been a whiplash kind of week. The rally was helped by Apple's earnings, helping to boost technology and growth stocks, offsetting declines among other consumer discretionary stocks today, weighing down by a sales warning from e-commerce giant Amazon. Looking over at the Dow Jones Industrial Average, it rallied more than 2.5%. The S&P 500 jumped 2.3%, and the Nasdaq 100 climbing nearly 3%. The U.S. 10-year yield advanced 9 basis points to just over 4%, and gold futures fell 1.3%. Looking over at West Texas Intermediate crude, it did fall nearly 2% to around $87 a barrel, and Bitcoin is lower by 0.2%. Among the main 11 S&P 500 sectors, only discretionary was in the red, and leaders of the upside in the Dow, Intel, Apple, and Verizon. Wrapping things up, Twitter's new owner, Elon Musk, said Twitter will form a content moderation council that includes widely diverse viewpoints, and decisions on content and account reinstatements are on hold until the council is convened. Live from the First Word Breaking News Desk, I'm Jess Minton. Charlie?
All right, we thank you very much, Jess. This update brought to you by SEI, with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at seic.com/tech. To hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet with the Bloomberg Business News Flash. Carol Masser, along with Tim Stenovic, live in our Bloomberg Interactive Brokers studio, streaming on YouTube. We are on Bloomberg Quick Take. We're watching Twitter, which is now not a publicly held company.
It's not. Elon Musk has got it.
Yep. Yeah, and he's also apparently, well, the Twitter CEO is out, and you know who's in charge?
Yeah, there's some other, Elon Musk. I mean, there's some other people out too. And this, come on, this
I'm not
this
laughing,
part was
'cause
expected, and they got a lot of money.
And it feels kind of harsh, but let's get to it. Bloomberg News West Coast correspondent Ed Ludlow, he is on site at Twitter headquarters in San Francisco. Ed, what have you been seeing? What can you tell us the latest?
Well, the latest is that much of what we've reported over the last 48 hours is still happening. Earlier today, it's interesting, some individuals carrying boxes came outside of the building and claimed to be Twitter employees and that they'd been laid off in a meeting. Sources tell me that they were not Twitter employees. It was a hoax. They were impersonating Twitter employees, and we phoned Twitter to say, what on earth is going on here? They haven't responded. So that's kind of the first piece of confusion of the day. The rest, I understand, is what I've already reported. Teams of Twitter engineers and product leaders are meeting with Tesla engineers to review the source code behind the Twitter platform. And my understanding is that they're doing this in buddy systems, being paired up with the end goal of basically trying to help Musk understand the code itself.
Hey, Ed, just about an hour ago, Elon Musk tweeted about forming a content moderation council. He didn't share any details, but the first thing that I thought of was Facebook's council that also has some sort of similar role. What do we know about who Elon Musk is going to allow back on Twitter, and the kind of challenge that Musk has in maintaining something civil that advertisers want to be aligned with versus living up to those free speech principles he's espoused?
Well, Musk's previously stated position is that he does not believe in outright bans on the platform, and also has spoken openly that he would reinstate Donald Trump. That hasn't happened yet, but that gives you a sense of where he stands on it. He talks about how timeouts from the platform are his preferred tool for policy breaches rather than outright bans. That brings us onto the question of policy breaches and what Musk tweeted earlier on having a content moderation council. We don't know who would be on it. He goes on to say it will include a wide range of diverse viewpoints. No major content decisions or account reinstatements will happen before that council reconvenes. That's Musk's position. I would say Twitter already has a safety and trust council, but that group of individuals largely looks at policy. They don't make case-by-case decisions, and that seems to be what Musk is suggesting here, forming some kind of group that does have the power to make case-by-case decisions on breaches of policy or account reinstatement.
Yeah, I do wonder too, I guess the next thing we all want to hear about, right, is truly, as you said, this council is going to go on in terms of content, but strategy going forward. What does Twitter become going forward as a privately held company? Because, right, the business model, I mean, I'm interested in how does Elon maybe get something out of it that Twitter as a publicly held company could not?
Yeah, so Elon Musk's logic for buying Twitter and taking it private was that he felt he had to make fundamental changes, not just to the business, but to the platform itself. And we know, because of text messages and emails disclosed through court filings, that he felt the only way to do that was if it was a private entity, that doing it as a public company just wouldn't have worked. On the platform side, he's talking about pretty simple suggestions, open sourcing the algorithm which powers Twitter so users can better understand why certain tweets appear in timelines where they do. He obviously wants to tackle the bots issue, which is pervasive on the platform. And then, what the biggest gray area really is that of policy, right, guys? He's talked about how he wants to have freedom of speech, the broadest range of voices possible. He doesn't want Twitter to be a place where the far right or the far left dominate the conversation. But how does he achieve that? We haven't really had any concrete proposals from him on that front.
Hey, Ed, before we let you go, just in the last minute that we have with you, because it's now a privately held company, there's going to be a lot of stuff that we don't end up knowing. We're not going to know top line, we're not going to know bottom line, or we're not going to know daily or monthly active users, things that we're so used to reporting. How do you cover it?
True, but the debt portion of this is still in play. Remember, the banks fronted the $13 billion of debt financing for this, but those same banks have to go to Wall Street and the asset managers and sell it to them. And through that process, we may learn about what Elon Musk's plans are for this new entity, because he'll have to sell that vision to the debt investors and the credit markets. They're not convinced, they're not going to get involved in this high-yield, risky credit, right? So there may still be some more to learn.
That was one of the debt managers telling you that they matter. Ed Ludlow in the background, the little horn beeping. We love when you're out on the street. Fun to check in with you. Bloomberg News West Coast correspondent Ed Ludlow on site at Twitter headquarters in San Francisco. Big day, 9 years later. And Twitter was a publicly held company
Twitter
for that
looks
time.
the same.
Not anymore.
Looks the same to me when I log in.
Yeah, I know. Well,
for now.
Yeah, we'll see what happens, right?
Yeah.
All right, Tim Stenovet, Carol Masser, we are Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Remember when we did Pursuits a while back and we were talking about shopping? It was kind of high-end, luxe.
In the metaverse?
Yeah.
Yeah, I do remember that.
I do, and I was kind of like, why would I don't know.
I mean, you have luxury companies creating NFTs still. I say still because we're not talking about NFTs.
Matt
like
Levine
we
talks
used to.
about NFTs in the magazine.
He does. That's why I'm thinking about it.
All right, we're going to talk about, though, brand awareness and working with brands when it comes to shopping in the metaverse. We'll get to that in just a moment.
First up, though, Charlie Pellet, we got less than a half hour to go.
Tim, we have got a big tech rally underway. You guys talking about Meta platforms, the metaverse. Meta shares, they're up now. Facebook shares up by 1.6%. Big tech rally underway. Let's begin with NASDAQ up 2.8%, but the NASDAQ 100 index, full of those big tech names, up now by 3.1%. Case in point, after earnings, Apple rallying 7.6%. Amazon after earnings, though, heading the other direction, down now by 7%. We've got Intel up by 10.4%. Pinterest after earnings surging 12.4%. A month-long bounce from bear market lows is gathering strength. 28 minutes to go. Apple's earnings report helped tech shares salvage their week, and a smattering of economic data suggests a modicum of progress is being made by the Federal Reserve's war against inflation. However, Lindsay Piegza, chief economist at Stifel, says the Fed is facing an uphill battle.
We're continuing to see these contagion effects in the agriculture market, in the energy sector, and this is going to make it very difficult for the Fed to get inflation back down to their 2% target. Even when we look at the Bloomberg estimates across the past several years, the market is consistently underestimating the level of inflation by anywhere from 50 to 150 basis points. And so this is an ongoing theme.
The 10-year yield, 4.00%. The 2-year, 4.42%. Spot gold down $19 the ounce to $16.44. A drop there of 1.2%. West Texas Intermediate crude also lower today. WTI down 1.2%, 88.02 a barrel. So again, recapping, the Dow, the S&P, NASDAQ 100 index, all pushing higher. Briefly, got to mention the Russell 2000 because it is up now by 2.1% up again. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Yeah, we're up almost 6% for the week on the Dow, up about 4% on the S&P, and the NASDAQ up about 2.2% this week.
That's pretty remarkable.
Considering, right?
Considering and you know what it speaks to also, though, Carol, is the way that the huge tech companies that fell this week, think about Amazon, think about Meta platforms, the less influence that they're having on the major indices because their market cap has shrunk so much this year.
That's a really good point, right?
Thank you.
You're
but Amazon, under $1 trillion, and I mean,
Yeah.
Meta platforms,
I know.
a shell of its former self.
All right, so speaking of Meta platforms, they talked an awful lot about the metaverse this week and continuing to spend money on it. And, you know, our next guest has some real smart thoughts about it when it comes to shopping in the metaverse.
We're pleased to have back with us Neha Singh, founder and CEO of Obsess. It's a shoppable virtual store platform, and it offers consumers a way that they can shop and experience their products online and in the metaverse. Neha, good to have you back with us. How are you?
Good. Thank you so much for having me, Tim and Carol.
So when we think about established brands in the metaverse, should we think about this as a way to kind of like the way that companies started offering their products online? You know, instead of sending you catalogs 20 years ago, you could go to, you know, I don't know, name the company, Patagonia.com, and actually look at a jacket there. Is the same thing happening now in terms of the metaverse?
Yes, absolutely. So the way, like, you know, we define the metaverse is that it is the next generation of the internet. Like, if you think about where websites started in the 90s, right? They were very plain. They had mostly text, and then we added images, and then we added videos. And now with the hardware capabilities that are there in the market, as well as our, you know, network speeds pushing into 5G and more, it's just possible to do much richer graphical interfaces online. And that's really what's leading to the metaverse, which is a 3D version of the internet. So what you're seeing brands do now is that they are starting to create these more 3D immersive experiences that are actually closer to the real world. right? Because the real world is 3D, it's all around us. We don't look at the real world in a database like we do most of online shopping today. So it's just that technology is now getting to the point that that's possible, and that this is all happening on mobile devices and on desktop computers. You don't require like VR headsets and, to put goggles. It's all happening on the devices that you already have.
I try to think where this could go, Neha, and I think about, could I essentially have a body scan of me so that there's an avatar that with my dimensions exactly, and I go to the metaverse and I go shopping at a mall, or I go shopping down, a street in New York City, pop into shops, and I can actually try on clothes with the right digital dimensions, and I can really get a feel of how things fit. Like, is there something there that makes me want to do it? Because I got to tell you, I like living in the real life. So this idea of shopping, I just can't get my head around it. So I'm trying to think, is there some super level that will get us there?
Yeah, so two parts to that. First of all, what you described with, having kind of your avatar in the metaverse and having your exact dimensions and trying on clothes, that's absolutely sort of the holy grail of the future of fashion shopping. We are not there yet in terms of having the full technology to be, able to have that body scan easily or try on clothes easily, because not all brands have 3D models of their products yet. But that is the direction that we are heading into. But the second part I would say is think about the things that we are doing with brands in the metaverse today is not like you are going into some other world, and it's actually not that foreign. So it is really an improvement over today's online shopping interface, which is good for, if you know exactly what you want to buy, and you can search and filter and get to it, and it's very efficient, right? But when you go shopping in real life in stores, there's a lot of discovery, and you almost it's an entertainment experience because you're getting that inspiration from the brand and, their stories. So
it makes, sorry to interrupt, but it kind of reminds me of the way that we saw news transition from newspapers to online, and the way that some people still really like to hold on to a newspaper, on a Sunday, because they might actually see or encounter an article that they wouldn't necessarily click on if it were presented to them on a web page, for example. So how do you replicate that in the metaverse, Neha?
Yeah, absolutely. So that's exactly what the brands that we are working with are doing, is that they are creating these virtual environments that, again, it's very easy for you to access. It's not like you are going into the metaverse and you don't have to become an avatar if you don't want to. It's really a different interface for exploring products in which you can discover things that you weren't necessarily looking for. And we actually see that from the data, is that customers are buying more in these environments because, similar to a retail store, you might just come across something that you weren't necessarily looking for. And it's ultimately a more intuitive shopping interface, because while most brands come to us to target a younger audience who's super used to gaming, right? And this interface is very similar to gaming,
right?
In terms of moving to a 3D environment. But then we also have customers that are high-end luxury brands, and their typical demographic is much older, and they're seeing great results because ultimately it's very intuitive. It's what you do in real life.
Nia, we got to run, but we'll check in with you real soon. Nia Singh, founder and CEO of Obsessed, joining us via Zoom from New York City.
Well, let's get to world and national news. Nancy Lyons is standing by in our 99.1 newsroom. Hey, Nance.
Thanks, Tim. Paul Pelosi, the husband of House Speaker Nancy Pelosi, is said to be recovering from a violent overnight attack in the couple's San Francisco home. Speaker Pelosi was in Washington with her protective detail at the time. San Francisco Police Chief Bill Scott says the suspect has been identified as 42-year-old David DePepe.
Mr. DePepe will be booked at the San Francisco County Jail on the following charges: attempted homicide, assault with a deadly weapon, elder abuse, burglary, and several other additional felonies.
Chief Scott did not go into any possible motive, but a person familiar with the investigation says the suspect shouted, "Where's Nancy? Where is Nancy?" before attacking Paul Pelosi. Elon Musk is now in charge of Twitter. The deal is final, and he's taken over as CEO, at least in the short term. Alex Webb with Bloomberg Quick Take says now the real work begins.
How can he turn Twitter into a tech giant? Because at the moment it's a $44 billion company, makes it at times 10 times smaller by market cap than Facebook, considerably smaller than Google or Apple. He's got a long way to go.
Bloomberg Quick Takes Alex Webb. Musk says no accounts will be reinstated without being reviewed by what he's calling a content moderation council. Tampa Bay Buccaneers quarterback Tom Brady today announced on Instagram he and Gisele Bündchen have finalized their divorce after 13 years of marriage. He says they arrived at the decision amicably and with gratitude for the time they spent together. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. You can tell we're in a little bit of a Friday mood, and maybe that's what happens when you get a little bit of a rally underway. But it's also, Nancy was talking about it. I mean, this is among our most read story in the Bloomberg, and you were chuckling before because you're like,
Can't believe we're doing this.
We actually had headlines.
We did. We
across
had
the Bloomberg before.
Yeah, 11:19 this morning.
Yeah.
All caps. Tom Brady says he and Gisele finalized divorce. Tom Brady says on Instagram.
Yeah, ending 13 years. Two of the highest earners in the worlds of sports and fashion. I mean, power couple.
Really, they really are. Yeah. Okay, so let's sorry.
Yeah.
I know.
Past tense
I'm still adjusting to it.
It's done.
Okay, so here's what Tom Brady said in a post on Instagram. Quote, "In recent days, my wife and I finalized our divorce. We arrived at this decision amicably and with gratitude for the time we spent together. We are blessed with beautiful and wonderful children who will continue to be the center of our world in every way."
Yeah, Gisele in her own post saying the decision to end a marriage is never easy, but we have grown apart. And while it is, of course, difficult to go through something like this, I feel blessed for the time we had together and only wish the best for Tom always.
Oh, you mentioned...
Do you think if he had retired and then stayed at home?
I have no idea.
Yeah.
Paul, what do you think?
In the newsroom, what do you think? If he had retired and stayed at home, do you think they'd be getting divorced?
Or maybe
No, you don't think they would. No, see?
State of the Patriots?
Paul's not raising. Paul, you weighing in on this?
Who knows?
Our producer, Paul.
I want to talk a little bit about their wealth because
Yeah.
you mentioned that they are two of the highest earners in sports. Their net worth doesn't come close to the money that was at stake in the divorces of Bill Gates and Melinda French Gates or Jeff Bezos and Mackenzie Spot, but they have been among the highest paid professionals in their respective fields. Brady has earned more than $332 million from 23 seasons in the NFL. That's according to the Financial Days Spot Track.
Yeah, he's got a bunch of deals too with well-known brands. You're talking about Under Armour, Hertz Global Holdings, some other brands. He's, we know the quarterback for the Buccaneers. Plans to join Fox Sports as an analyst once his playing career is over. The size of that deal unclear. Fox, though, has disputed a New York Post report that it was valued at over around $370 million for 10 years. And Gisele, she's got major deals with a lot of well-known brands like Chanel and Louis Vuitton. So interesting. This is Bloomberg, a most read story.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelota. Friday rally ahead of the weekend with the Dow, the S&P, NASDAQ all surging at or near session highs. Also, we've got the NASDAQ 100 index up now by 3.1%. NASDAQ Composite Index up by 2.8%. Apple helping lead the advance today. Apple shares up now by 7.6%. Cannot ignore Amazon, though, after last night's earnings news. Amazon down now by 7.2%. Briefly, Intel rallying by 10.9%. The Dow up 812 points, up by 2.5%. 12 minutes to go ahead of the closing bell. S&P up 91, up 2.4%. The NASDAQ Composite Index up by 300 points, up 2.8%. The 10-year yield 4.00%. We've got the 2-year yielding 4.42%. Spot gold down 1.1%, 16.44 the ounce, while West Texas Intermediate crude is down 1.1%, 88.08 a barrel. Briefly, big numbers to the upside on the week. The Dow this week up by 5.8%, S&P this week up by 4%, and NASDAQ up this week by 2.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
The following is an editorial from Bloomberg Opinion.
Few Americans remember the horrors that polio once inflicted on children. A massive vaccination campaign nearly eradicated polio from the globe. Now this highly contagious, sometimes debilitating disease is a threat once again. Just 29 cases of wild polio have been recorded so far this year worldwide, while only 1 case in the U.S. has been recorded. 70 positive samples of polio have shown up in nearby sewage testing. Experts estimate that for each case of paralytic polio, hundreds of others are infected without symptoms. Vaccine hesitancy and the rise of misinformation have created pockets of vulnerability, and even a small decrease in immunizations can lead to large outbreaks. Only through sustained investment can the world protect children from this devastating yet entirely avoidable disease. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we are getting ready to wrap up the last full week of October trading, which is pretty remarkable. And look at the rally underway.
Really?
We
are.
Yeah. Oh, yeah. November starts next week. I mean, not on Monday, but right, 30 days has September.
Yeah, so
31st.
it's the last full week, yeah. So we still got one more.
Yeah.
We got one more day of lunch at the office.
But look at the rally.
I'm thinking about.
We had it, no. It finished.
Today's the last day?
Yeah.
Okay.
All right, we're kind of all over the place, but that's the kind of week it has been.
Sorry, that's just me.
But as Charlie mentioned, stocks holding on to their gains.
Let's get into it with Michael Sheldon, Executive Director and Chief Investment Officer at Hightower RDM Financial Group, joining us once again on the phone from Westport, Connecticut. Michael, good to have you back with us. How you doing?
Thanks very much. Pleasure to be here.
So, are we out of the woods?
Well, this week has certainly been an impressive rally. I think you have to sort of step back a little bit. The market's bottomed around October 13th or so, so this is sort of the fourth multi-week rally that we've had in this bear market that started back in January. And when the markets hit their lows October 13th, I think sentiment was really pretty negative. And a couple other things have contributed recently. There's been a little bit of a pullback in the dollar, which has been super strong this year. And interest rates have started to pull back a little bit as well. So next week will be really interesting because the Fed meets November 1st and 2nd, and there's a lot of anticipation of what they will or won't say and whether they'll start to make their shift. But this has certainly been an impressive rally so far. One thing just to mention is that the Dow, interestingly, after today, is the first of the major indices to move back above their key 200-day moving averages. So that's something a lot of investors watch, separating a longer-term rally versus a short-term rally. None of the other major markets have done that, but that's certainly something to monitor going forward.
So, sorry, Carol.
No, you go.
So we could be out of the woods when it comes to the Dow because of that technical, but proceed with caution. I mean, what's the takeaway there?
Well, I think it's certainly an encouraging sign when the different indices move above their 200-day moving average. Historically, at least, that helps separate a short-term move from a longer-term, more sustainable move. But I think in terms of whether we're out of the woods, I think it's a little, certainly in our opinion, a little bit too early to say that. If you look at some of the economic data, and I think it's really important to keep an eye on the consumer, for example, because that represents 2/3 of the economy. So on the positive side, looking at the consumer, you have the lowest unemployment since 1969, and you have wages growing at 5%, but that's being offset by higher inflation and rising rates, which are affecting the equity and housing market. So the consumer appears to be pretty resilient, and that sort of fits in with whether we're in a recession or going into a recession. And so I think there's still some uncertainty about that and what the Fed will be doing at their next meeting.
It's funny, too, that you mentioned the Dow. I mean, I feel like we live in a world where people kind of blow the Dow to the side and think about, okay, what's the S&P doing? What's the NASDAQ 100 doing? So how do you kind of factor in what's going on with the Dow back above its technical move, above its 200-day, Michael, versus what we're seeing on the S&P and the NASDAQ, which is much more representative of a broader part of the market?
Yeah, that's a great question. And if you're in the financial markets like we are every day, most individual investors follow the Dow. That's what gets all the headlines. You see that on the newspapers and on the news. But people who follow the markets on a regular basis really follow the S&P 500. And one of the things we're seeing, which is really interesting, is I think you're starting to see in the past couple of weeks a shift, unfortunately, out of technology, which has been the market leader for much of the past decade or so. And the shift is out of technology stocks. We already started to see some of the money-losing, high-valuation stocks get hit starting in 2021. But the shift is, for example, if you look at the equal-weighted S&P 500 this week, that's up about 5.4%, while the S&P 500, which is market cap weighted, is up just 3.9%. So not a big difference, and it's only this week. But I think that's an interesting trend that we'll have to watch heading into the end of this year and next year.
Can I just look, it's funny, I was just kind of picking apart the market here as you're talking. Industrials are up almost 7% this week. Utilities are up almost 7%. Yeah, I mean, real estate, financials. I mean, most of the 10 of the 11 major industry groups in the S&P 500 are higher, but it's consumer staples, financials, real estate, utilities, industrials at the top. What does that tell you, Michael?
Well, I think it's sort of a mixed bag. Industrials have been improving recently. We've seen some better relative strength in some of those stocks. I think investors are still trying to figure out if we're going to be going into a recession or not. And if we are in a recession, is it going to be a mild recession, which to us seems like the most likely scenario, because you don't have the kind of major imbalances this time around that you did, for example, in the banks going into 2008. Consumers generally, although the household savings rate is down to, I think, about 3.4%, households in general don't seem to be household savings in general seem to be okay. Household balance sheets seem to be okay. The one thing that we're starting to watch is housing is starting to come down, and that's interest sensitive, so that makes sense. But in terms of the sectors, one of the other things to watch, for example, is small caps, which has done well, and that's sort of small caps would do better if we're coming out of a recession and there's sort of more speculation and people are more optimistic. So I think it's too early to sound the all clear, and it'll be interesting especially to see what the Fed says next week and what the employment numbers come out as next week as well.
It's a loaded week next week.
Yeah. Do you expect the Fed to, I don't know, give us some sort of guidance that they're still looking at, that they're considering 75 basis points for December?
Well, I think 75 basis points for November is pretty much baked in the cake. But I think for December, that'll be a more interesting meeting. For this meeting, we don't have the inflation data in front of us. We had already the inflation data that came out today, for example. The Fed's favorite core PCE index actually rose month over month to 5.1%, which is the highest level since, I think, back in March when it was 5.4%. But at the Fed meeting next week or in 2 weeks, I think the keys to watch will be, one, does the Fed say we're making progress on inflation, which would be a signal that they're starting to shift policy? Or two, do they say that inflation remains higher than we'd like, which continues to be the party line in recent weeks, and will probably indicate a 75 basis point hike in December may be more likely.
All right, we're going to leave it on that. Hey, Michael, have a great weekend. Thank you so much. Really appreciate it. Michael Sheldon, Executive Director and Chief Investment Officer at Hightower RDM Financial Group based in Westport, and that's where we find him on the phone on this Friday. Just a few minutes left in today's trading session. We're holding on to our highs, just turning over a little bit, but we're up more than 2.4% on each of the major averages, and NASDAQ really the outperformer as we get into the last few minutes of trading. Time to head over to our TV team and colleagues for Beyond the Bell, live on radio, TV, YouTube, and on Quick Take.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast. We're joined right now by Tim Stenovic and Static. We welcome our audiences across Bloomberg Radio, Bloomberg Television, as well as on YouTube and Quick Take. Carol Masser, I love you. It's another wild day here in the markets, wild week in the markets, but second straight week of gains for the S&P.
Did you guys hear that, Static? I hear something. I hear something. Yeah, pretty remarkable and how dramatic, right? The run-ups that we've seen in equities and pretty broad-based. Did you see the VIX? It's down about 1.5 points today. It's just below 26, so it's just amazing the complacency that we see.
Michael Sheldon over at Hightower RDM Financial Group just gave us an interesting technical. He pointed out that it's an encouraging sign that the Dow, the Dow, I don't know what you think, Romaine, is above its 200-day moving average, okay? It's encouraging, but it's still too early to say that we're out of the woods. You know, we can't point to the S&P 500 doing the same thing yet.
Although, Romaine, I'm going to nitpick with you a bit. You said, we're on pace for the best month ever for the Dow?
I thought I heard that somewhere.
At the most, we're up the most since 1976.
Is he
But we're going to be up 24% to get to 1938.
Is he wrong, Karen?
In the month of June, 1938.
Okay.
Still a ways to go.
Wait, are you wrong?
No.
No, I'm
No, it's
starting
not
now.
possible, is it?
The terminal is incorrect.
Up is down, down is up.
Wow.
Wow.
Meanwhile,
Anyway,
I have some
that's a
humble
topsy-turvy world out there. This apparently is now the world where everyone seems to think there are maybe bargains to be had. There's a lot of people that pointed out, though, when you look at sort of the levels that we're at here on the market, this is still a little bit of a range-bound market, but I think a lot of people will take it. A 5% gain last week on the S&P 500. Looks like we're going to get a weekly gain this week of roughly 4%. That's on the back of a 2.5% gain on this Friday. 93, 94 points higher on the S&P 500. The Dow Jones Industrial Average up more than 800 points or 2.6%, while the NASDAQ Composite is going to close higher by more than 300 points or 2.9%. Meanwhile, a lot of those cyclical names that we've been talking about, the Russell 2000 up 2.2% here on the day.
Guys, worst performing name in the S&P 500 this week.
Amazon.
Which one?
Meta.
Yeah, absolutely. Right, down about 24%. All right, S&P 500, though, Taylor, really broad-based buying in today's session. 453 names to the upside, 49 lower, 1 unchanged.
Take a look at where we're on the sector level, Carol, because it is a broad-based rally indeed. For some of the winners, I mean, this is wild. Technology, hardware, and semiconductors are up 4.5% to 6.5% on the day alone. You're getting also software and services that are also up 3%. Again, if we talked about the quarterly earnings season within big tech, and then you look at this price action, you may not believe it, but there it is. Take a look at the worst performers. There is a lot of green on the screen, Carol, even in, quote, those worst performers, but it has some inflationary aspects to it, some food and staples, some of the pharmaceuticals, the transportation index, energy, and then all the way down at the bottom, the only sector in the red is the retailers. They're off 2.4%.
All right, good check on those broad-based groups. Let's get to some of the individual gainers in today's session. Got to talk about Apple, right? That was certainly the standout in earnings last night, and that stock up at its highs almost 13%, finishing the day with about a gain of about 7.6%. We talk about the influence that this has had on the markets. It's 7% of the S&P, 14% of the NASDAQ 100. We did know the big headlines, revenue, profit beat, estimates, and that's despite iPhone and services being soft. So nonetheless, really some outperformance there. Intel also outperformance, and that really pushed the Philadelphia Semiconductor Index higher as well. Intel top in the NASDAQ 100 and the S&P 500 today, up about 11%. So holding on to most of the day's gains in today's trade. Love this story, but it was really largely about pledging to cut costs as it moves forward and over the next few years. And then Pinterest, remember when we were breaking down all those earnings last night? This was really a standout in today's trade as well. Pinterest up almost 14% in today's session, soaring. Third quarter revenue beat analyst estimates, and third quarter sales growing 8%. Monthly active users also grew slightly. So all of those social media platforms struggling, and yet they were able to grow.
That's because everybody's jumping off Twitter and moving to Pinterest. I've already migrated over there.
It's probably a healthier place for all of us. Maybe we should all spend a little more time over there.
It's all like wedding dresses and bows.
Exactly. All right, I'll try to talk about Amazon now because we got to talk about that as our biggest decliner, at least in the S&P 500, certainly weighing it down 6.8% on a points basis. The company spooked investors by forecasting its slowest ever holiday quarter growth. Third quarter results indicated weakness in its AWS cloud computing business as well. Also, some real underperformance when it came to healthcare today. Edwards Lifesciences Corp falling by 18% today, slumping the most since 2013. The company, it makes blood vessel valve replacement. It cut its annual profit forecast, citing shortfalls in U.S. hospital staffing and other factors that hurt utilization. And then DaVita Healthcare, the dialysis company, falling 27% today, plunging the most since 2000. They cut its EPS guidance for the full year. It posted earnings results for the third quarter that came up quite short.
Meanwhile, also coming up short on the day is the oil market, but largely that's a issue because the dollar is stronger on the day. Now, trying to pass what's happening in overall markets at the moment, we're looking more at perhaps economic data on the day, the fact that we've still got a strong PCE, we've still got a strong economic labor cost index, we've still got basically a strong kind of signal from the US economy, and therefore the bond market reacts to that. But in terms of commodities, they cues off the US dollar strengthening and oil pulls back, but it's actually up on the week. And that's as we saw record exports, as we see, of course, still continuing issues in terms of production. So we're seeing actually a pull down in certain other of the metals as well. Zinc, steel, iron ore were all on the downside. Not lead, though, as Romain was teaching us a little bit earlier, lead having a stellar day. I'm looking at the FX pairs, therefore, as we see that strong US dollar, it really is.
Lead is the future.
Lead's the future.
Yeah,
Old
big
is
tech
new.
is over.
I thought it was plastics.
Plastics.
Where's Bloomberg lead when you need it? Meanwhile, British pound strengthening 0.4%, the only major pair up against the US dollar. Everyone else is sinking. Aussie dollar weakening by 0.6%. Canadian dollar, the loonie is weaker, as we see, of course, that reflecting the oil market on the day. Sovereign bonds, money moving out of bonds, particularly in Europe, in Portugal, Germany, France, all yields higher, and feels a similar move that happened in the US, Taylor.
Indeed, Caroline, take a look at where we are for bond yields. Yields are up 13 basis points to 440. 10-year yields are up 8 basis points, trying to hold on to 4%, 3.999. Romain, as we've been mentioning, I mean, yields higher like this, to this magnitude of 8, 9, 10, 11 basis points, typically would shock us, but we have really just sort of recovered the range-bound area that we've already been in. So unfortunately, we're getting used to these kinds of moves. And again, still looking at this range-bound of about 4%, and this is where we've been.
And this is for the day because on the week, right, yields are slightly lower, right? I mean, we're down like 7, 10. I mean, the 10-year is down, what, like 20 basis points. But I think the move around, and you talk about the range-bound nature of this, I think it kind of highlights the idea that there is a lot of indecisiveness in this market, or at least a bifurcation of that decisiveness, the idea of where we're going next.
Yeah, well, we're going to find out, right? We've got a Fed meeting next week. I feel like it's another jam-packed next of stuff coming at us.
Yeah, it's going to be busier next week than it was this week.
Everyone keeps talking about
quarterly earnings.
Fed meeting, right? Jobs report, and then healthcare companies, a lot of things coming our way.
Okay, so 75 basis points is pretty much what people expect the Fed to say on Wednesday, but then we turn our attention to December, Caroline, and try to get an understanding for what's going to happen there. Vince Signorella from the Macro Squawk desk joined us a little earlier in the program, and he made the argument that the Fed really needs to slow down, and he said, I'm not saying that they should do anything, they should do nothing in December, but he argues that they got to give it time to let this hit the economy.
Yeah, the fact that we, of course, are delayed in nature. But what's already being signaled by some of the CEOs that are foretelling the fact that we're already heading towards a recession, the fact that Amazon just pointed us towards a slower consumer. We have micro bits of data, the housing market that makes us be concerned, but in general, this is a market that seems to still bear strong, and the fact that central banks around the world are having to still fend off inflation that's just way too high.
Yeah, and in addition to what we get and what we hear out of Powell too, I do think the earnings still matter. I mean, obviously the level of companies with regards to size, not quite what we got this week, but I think just the breadth of industries that they cover and the different corners of the economy, maybe it's sort of that jigsaw puzzle finally comes together and we get a better picture of the economy in full.
I think so too, especially when you think about Uber, and then I think Lyft is later. When you think not only about the gig economy, but the reopening trade, what a bellwether that has been, the ability for the consumer to spend or not. We'll have some car stuff sprinkled in there as well.
And don't forget, you get like the Zillows and Open Doors, which of course have been hit hard. You get the Airbnbs of the world. We get a read on travel, things like that as well.
But don't you think I think what you said too, Taylor, about the reopening economy, like look at the airlines, how well they did with their earnings. Like people are doing different things. Maybe they're not buying so much stuff from Amazon or, kind of pulling back in some of the traditional buying that they did during the pandemic and getting out there, right? And maybe that's why we've seen those airlines.
To the point, we had Hertz yesterday, the CEO of Hertz, and he said he didn't see a single signal from what he's seeing in his business that we're slowing down in any way. To your point, we're deciding to have experiences rather than buy the ultimate Halloween costume to move them all on our Amazon.
Caroline, you tweeted out a great comment. What did the Intel CEO say in the press release?
Nothing good to see
there were
in
no
the economy.
Good economic signs. It really does paint a different picture.
How did we get through this and not talk about Tom and Giselle?
I know. I don't want to talk about it.
It's among the most read stories on the Bloomberg.
Romaine, are you up to date?
I'm not. Did something happen? Did he win another Super Bowl? Or did she win another Super Bowl?
No.
Romaine.
Oh, okay.
All right. Anyway, that's a wrap, guys. Have a great. Well, it's not Halloween till
I
Monday,
like Giselle. She's cool.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I guess they were done
They
with
cut
us.
us off. That was the control room saying enough is enough when it comes to this.
Tom and Giselle?
Yeah, I was going to say tabloid talk.
Maybe they're just done with us. I'm kind of obsessed. No, it's just interesting to see the trade, and I am curious to see how the Fed manages things. They are going to say they're going to be data dependent. There was a lot of, before they went into their quiet period, there was a lot of conversations about continuing to be aggressive, but we shall see.
We shall see. Tuesday is when the meeting starts. Wednesday is when we get the press conference, and we'll, of course, bring it to you live. Let's get to world and national news. Nancy Lyons in our D.C. newsroom. Hey, Nance.
Thanks, Tim. President Biden says his prayers are with the Pelosi family after the House Speaker's husband, Paul, was attacked at the family's San Francisco home. Bloomberg's Washington correspondent Joe Matthew has more on what happened.
A source tells Bloomberg Speaker Pelosi was the intended target as the man who beat her husband shouted, "Where is Nancy?" before attacking, recalling the chant heard from rioters on January 6th as they climbed the stairs of the Capitol toward the Speaker's office. Speaker Pelosi was in Washington with her protective security detail at the time of the attack.
You can hear more on Bloomberg Radio with Joe Matthew today at 5 Wall Street time on Bloomberg Sound On. President Biden and Vice President Harris are making a rare joint campaign appearance tonight in Philadelphia, just 9 days before the midterm election. Bloomberg's Anne-Marie Hordern reports Democrats are trying to hone in on an economic message with inflation still running hot.
Their argument is that you cannot leave it up to the Republicans in terms of making terms of the next few years and what that would mean for the economy. And they're really trying to tout the legislation they've got done, the Inflation Reduction Act, and of course last summer the Hard Infrastructure Act, where they worked with Republicans.
Bloomberg's Anne-Marie Hordern reports the message for Republicans has not changed. It is all about inflation being at a 40-year high. Rock and roll pioneer Jerry Lee Lewis has died at his Tennessee home at the age of 87. Known as the Killer, Lewis garnered more than 20 gold albums during a career that spanned more than 50 years. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you, Nancy. Well, Bloomberg, The Big Take. It is now a daily podcast and a radio show. It's hosted by Wes Kosovo. It's a daily look into one big story, one big issue of the day. And today, the defining conflict of the streaming TV era pits HBO against Netflix. It's detailed in an upcoming book. The title is called It's Not TV. It's written by Bloomberg's Felix Gillette. Here, Felix and Wes talk about the future of the streaming wars.
I think the pressure is ramping up to really monetize every single person that's using the service, and that does mean making sure that if you're watching it, you're paying for it. And simultaneously, the other way that Netflix is dealing with all this is they've announced, we're going to launch a advertising on the service, on the platform for the first time. That will allow them to offer a less expensive Netflix. Instead of paying $15 a month, let's say you'll pay $7 a month and you'll see some ads. And broadcast television, which was advertising supported and commercial supported, there are always limits on what you could do artistically on television because advertisers would get nervous about, violence, moral complexity, stories about addiction. They didn't want stories about prison. There were all sorts of things you couldn't do on broadcast television. If you moved it to a format that was advertising free, suddenly there was a lot more creative freedom. And that led to this huge, revolution in the art of television that happened on HBO. And it'll be interesting now to see almost the reverse process as a service like Netflix that has also operated in this ad-free, commercial-free environment for, its 25 years of existence. Suddenly they're going to have advertisements. Well, they're also going to have sponsors looking over their shoulders, and what that'll do to the programming, we'll have to see.
And be sure to catch Bloomberg, The Big Take, every weekday morning wherever you download your podcast and on Bloomberg Radio every night at 11 p.m. Wall Street time.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks end a turbulent week with a hefty gain, and it is on to the weekend with the Dow, the S&P, and NASDAQ all surging. The Dow this week up 5.7%. On the week, the S&P up by 4%. NASDAQ this week up 2.2%. Today, we saw the S&P rally 93 points, up 2.5%. The Dow up 828 points, up 2.6%. NASDAQ today up 2.9%. 10-year yield 4.01%. Spot gold down 1.2%, 16.44 the ounce. West Texas Intermediate crude down 1%, 88.21 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, from Alphabet, Apple, Amazon, and Google to Microsoft and Meta, it was all about big tech earnings this past week. That was
I
just
like
this
what
week.
you did there with the alliteration.
Thank you very much. Yeah, paying
really
off,
good.
right?
There's
That
one name you didn't
education.
say, though.
Which one?
Pinterest.
I did not work that one in. So
Yeah.
let's see what maybe Alex has to say.
Yeah, it's an important one. We got Alex Barinka, technology reporter for Bloomberg News. She joins us via Zoom from Los Angeles. She has been all over the earnings of the big tech firms. I want to focus, though, on social media because it's what she covers very closely. It's a week of chaos, as you write, Alex. The worst performer in the S&P 500 was Meta Platforms, trading at around $100 a share. We haven't seen that, gosh, since, 2016, I believe, at this point. But there was a bright spot in the week of chaos, as you write at the end of the week. What was that bright spot?
It was a bright spot, and I had to talk to the man in the chief spot at that bright spot, Pinterest, as you mentioned. The platform where you can kind of find shopping inspiration or ideas for your home was the one company that surprised for the upside this week on earnings. They put out results that impressed Wall Street both on revenue and users. And I will say they're a smaller company. They make around $680 million a quarter in revenue. Compared that to Meta, who's closer to $28 billion. So they have some room to grow, but in a really dramatic week for social media stocks, I had to pick CEO Bill Reedy's brain.
All right, so what did you find out?
He talked a lot about positivity. He talked about, and called that CEO speak, but he kind of laid out this war that's going on in social media where everyone's kind of fighting for eyeballs for the next funny dance video to keep users around because those users are really important to advertisers. The problem with some of these platforms like Meta's Facebook or Instagram or Twitter is, right now those platforms, it's a lot about entertainment and there's some negativity or political fodder or, throw in the next controversy. He has said in his first 120 days since he's been in that role that he's really tried to focus on giving users a place that they know what they're going to get. They can go there for inspiration and they're not going to be bogged down by all of these other things. So that was kind of his big take as to why, they think that user growth grew last quarter. They've been able to turn around some troubling times in terms of users over the past year, and why perhaps the street is a little bit excited about what they had to say.
And to be fair, a little perspective, I mean, Pinterest is down more than 70% from hitting a high back in February of 2021. So great bounce, no doubt about it. But I do wonder, what? Go ahead.
Well, I was just going to ask about the way people use Pinterest, Alex, versus the way that people use these other platforms, because, this is a very event-specific social network. I'm thinking like remodeling houses or redoing your kitchen, getting married.
And people have been getting married, like all of a
They
sudden,
have.
back in a big way.
But how does the CEO think about the making this a place where people return to over and over again rather than for one specific big life event?
Yeah, and I asked him about that. And there are certain areas that they're actually starting to lean into more than just redecorating your house or figuring out how a pair of loafers can fit into an outfit. They're leaning more into things like consumer travel. He also told me that areas like finance and financial decisions and educational content around that is a place that they are pushing into. So I did think you nailed it on the head there. They're looking for a kind of times in your life where you have a certain intent that you want to seek out inspiration or information. That's what they're really pushing for, as opposed to, just something you pull up when you have a few moments waiting for the train to arrive and you want to kind of fill some time in your day.
So it is interesting. And I was going to say, I was curious when I was looking at the share price and just kind of putting that out, Alex, for some perspective. And I do wonder, though, as we look at a lot of these companies, do we have to do a bit of a reset in terms of maybe the growth models going forward? Because there's a lot more, whether it's the, competing for the ad dollars or just competing for people's time, there's a lot more choices out there.
There are, and I think the companies, we're seeing kind of the manifestation of the reset that these companies have been doing, cost cutting and rethinking headcount and narrowing down the number of projects that companies working on. That's been kind of the big theme over the past few quarters, because that money from marketers isn't coming in like they thought it would. So, Pinterest is the least dramatic of this moment in time, and we're excited to shine that light right now. But that's not to say that there's not tumultuousness in social media writ large, because, marketers are not spending as much. I think we did see also, I think Amazon said that this holiday season might be their lightest that they've seen in a really long time. So that might continue with them. But in terms of kind of meeting or beating expectations that the street has for these companies' performance, Pinterest has been the one who's actually been able to do that.
Can Pinterest give us any idea of the health of the economy, or am I reading too much into it? I mean, it's funny because people would criticize Snap by talking about macroeconomic headwinds because it is such a small player. But then a company, like you said, like Amazon, comes out and gives, guidance that does not meet expectations for the fourth quarter. Meta, same thing. What can we gather from Pinterest in the way that it sees the economy?
Yeah, I asked the CEO the question. Their CFO was actually on the line as well. And they both kind of pointed to the fact that they think that folks will be spending on certain things like, holiday decor. They looked at, they also said that there's some return to strength in consumer product goods that they're seeing interest and purchases through on the site. So those are a couple of places that they pointed to. But look, inflation is real for the consumer. So I would think that even on their platform, we continue to see some of the trends that are being talked about by the giants like Amazon going into this holiday season.
Well, a great roundup. So appreciate it. What's been a very dense week when it comes to all those big tech names. Alex Barinka, technology reporter at Bloomberg News, joining us via Zoom from Los Angeles. But yeah, I mean, it's pretty remarkable, the companies that we heard from, and so much to digest. And yet here we had a market. The bulls were back in a big way.
You use pins?
I don't.
What about your daughter?
I don't know.
Yeah.
So what do you do with it?
We used it for our wedding. I think
So
I've
what
talked
is it
about
like?
this
It's
before.
just to put stuff that you're interested in.
Yeah, it's like a mood board.
Okay.
Is that what they're called? Dream board, mood board?
I guess it's an old-fashioned
Yeah.
bulletin board, like people would put stuff.
Exactly.
On. I guess I get
That's
it.
what we use it for.
I get it. But interesting, and really some outperformance, up about 14% today. This is Bloomberg.
stories, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've wrapped up a turbulent week for the U.S. stock market, a big week as well. Let's begin with the weekly numbers, because on the week, the S&P advanced by 4% this week, the Dow up 5.7%, NASDAQ this week up by 2.2%. Today, the Dow rallied 828 points. That was a gain of 2.6%. We had the S&P up 93, higher by 2.5%. NASDAQ this week today up 309 points, up today by 2.9%. To be clear, today the S&P up 2.5%, the Dow today up by 2.6%. 10-year yield 4.01%, 2-year 4.41%. Spot gold down $19 the ounce, lower by 1.1%. Gold $16.44 the ounce. West Texas Intermediate crude down 0.9%, 88.29 for a barrel of WTI. So a big week for stocks behind us. Michael Sheldon is Chief Investment Officer at Hightower RDM Financial Group. And right here on Bloomberg Business Week, he told us he has been looking at market technicals.
The Dow is the first of the major indices to move back above their key 200-day moving averages. So that's something a lot of investors watch, separating a longer-term rally versus a short-term rally. None of the other major markets have done that, but that's certainly something to monitor going forward.
Amazon lower today by 6.8%, well off session lows. It shocked Wall Street and is projecting its slowest holiday quarter growth in the company's history. Apple shares rallied after delivering good enough news in its quarterly report. We had Apple shares up today by 7.6%. Stellantis, the owner of the Jeep and Ram brands, is offering buyouts to an undisclosed number of salaried employees in the United States. Stellantis shares up today by about 0.1%. So again, recapping, the Dow, the S&P, NASDAQ 100 index, Russell 2000 all rally, S&P up 93, up 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, good stuff. Thank you so much. Well, if you think consulting, you probably think of McKinsey & Company, a firm that's nearly 100 years old, more than 40,000 employees, a firm with an alumni network of more than 34,000 working in just about every business sector out there, 120 countries. You know, alum, household names, Sheryl Sandberg, Chelsea Clinton, current CEOs of Citigroup, Alphabet, and Morgan Stanley. McKinsey, the firm, safe to say in many ways, is in its own right, a household name. Tim, it's also the subject of a new book. It's entitled When McKinsey Comes to Town, The Hidden Influence of the World's Most Powerful Consulting Firm.
The book co-written by Walt Bogdanich and Michael Forsyth. We've got Walt Bogdanich, who's an investigative reporter from the New York Times, on the phone with us, joining us from New York City. Walt, really good to have you with us. Congratulations on this book. As you and Michael write, McKinsey has advised tobacco and vaping companies, I think Juul, purveyors of opioids, repressive governments, oil companies, and more. The challenge, though, in reporting something like this is that McKinsey is a privately held company, and it's not a company that necessarily talks a lot to the press. Take us through your process here and really big picture what you found.
Well, when we started, we knew it would be a challenge because McKinsey's entire business model is based on secrecy. You know, never disclose our client list, never disclose what they pay us. And they're hugely powerful. I mean, they have no accountability. And what we wanted to do was look at the secretive company, see what we could find, and find out whether, you know, they're doing good things or bad things. That's what journalists do.
That's true, right? That's what they're supposed to do. Walt, you did get a hold of that McKinsey client list, which they do hold near and dear. So what did it, as you went through it, what did it reveal to you?
I think we were most interested in the conflicts of interest that emerged from that list. These are conflicts of interest that would never have been known. What kind of conflicts I'm talking about? Well, you know, advising, you know, the biggest pharmaceutical companies in the world at the same time that they're advising the Food and Drug Administration. That would seem to be a major problem. They were advising all the big cigarette companies at a time when they were advising the Office of Smoking and Health or Office of Smoking within the FDA. So those are glaring examples that we would not have learned about if we had not obtained that list.
Walt, is there any type of work that McKinsey won't take?
Well, these days, I think they'll say yes. But I mean, I won't know until I see the proof. I mean, what they did, and to their credit, and let's see whether they carry through on it, after a lot of the exposés that were in the media, mostly in the Times, they decided to change. They decided to screen their clients more carefully and to monitor them, to do a better risk assessment. How well that's working, how, thoroughly they are engaged in that new policy. I hate to use the cliche, time will tell, but time will tell.
Well, Walt, one thing, you have 3 Pulitzer Prizes for your investigative journalism. You've produced stories for 60 Minutes, ABC News, The Wall Street Journal, both here in New York City, also out of the nation's capital. Why is it that you've written about a lot of stuff, and there's been a lot of things that have gone wrong, since the financial crisis, before the financial crisis? Why did you want to home in on McKinsey in particular?
Well, I guess there's 2 answers. One of them is that it is big and powerful and secretive and influences our lives in ways that most people don't know. That's one of them. But in fact, that's probably the biggest one. And that's catnip for investigative reporters. Sure, there's a lot of things to look at, but, that's one of the biggest. Also, inequality is one of the huge issues in our society today. It's tearing apart the country. I began gathering evidence indicating that McKinsey played a role in that, in aggravating and accelerating that trend. And I thought that was important to report, and we did.
It's interesting. It still attracts people who, perform at the top of their class when it comes to business school. When I went to business school, the place that people wanted to work was McKinsey. Is there any indication, and that wasn't that long ago, is there any indication, Walton, we just have a minute left and then we'll come back with you, that has shifted at all because people really want to work for this firm?
Well, they want the best and the brightest, and they pretty much limited themselves to what they considered the best schools, the Ivy Leagues. But it's interesting. Recently, I got word that they're now recruiting at CUNY Law, and CUNY's a great, law school, but it doesn't typically serve the kinds of clients that McKinsey wants. So I think that may indicate that there's changes afoot.
All right, we're going to come back with Walt Bogdanich. He, along with Michael Forsyth, 2 authors. They've written a book. It's all about McKinsey. It's entitled When McKinsey Comes to Town, The Hidden Influence of the World's Most Powerful Consulting Firm. As we've mentioned, Walt, 3 Pulitzer Prizes, has worked on 60 Minutes and so much more. And, of course, is an investigative reporter for the New York Times. We're also going to mention, because McKinsey itself has put out a statement about this book. It's on the website, but we'll get into it, and curious to see what Walt has to say about it.
Looking forward to continuing that conversation in just a few minutes. In the meantime, let's head down to our world and national news update. For that, we go to 99.1 Studio in Washington, D.C., and Nancy Lyons. Hey, Nance.
Thanks, Tim. House Speaker Nancy Pelosi's husband, Paul, is recovering in the hospital after a violent break-in at their San Francisco home. San Francisco Police Chief Bill Scott says his officers were called to the home for a wellness check and then walked in on Paul Pelosi and the suspect.
Our officers observed Mr. Pelosi and the suspect both holding a hammer. The suspect pulled the hammer away from Mr. Pelosi and violently assaulted him with it. Our officers immediately tackled the suspect, disarmed him, took him into custody, requested emergency backup, and rendered medical aid.
Scott says the suspect has been charged with attempted homicide as well as other crimes. President Biden says he is praying for the Pelosi family. Well, the president is still working on trade relations with China, even after putting roadblocks in China's path to supremacy in computer chips and other high technologies. Bloomberg's Irv Chapman reports.
The administration's top trade negotiator, Catherine Tai, has been in periodic contact with her opposite number in Beijing, she said in a Bloomberg interview.
The United States economy and the Chinese economy are the 2 largest economies in the world. Our trade and economic relationship is important not just to us, but to the entire world economy. And it is with a seriousness of of purpose that we approach the management of this economic relationship.
Ambassador Tai said officials of countries taking part in the new Asian trade initiative proposed by President Biden will meet in the next few weeks to work out its provisions. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much for that update, Nancy Lyons. Tim Stanivek and Carol Masser live in the Bloomberg Interactive Brokers
Can
studio.
you believe on Monday it was just when we were talking about China? Was it just
That is pretty remarkable. Yeah.
Right?
Oh, I mean, all
coming
week,
off the
too.
weekend?
Yeah.
No, but I mean, like coming off all of the President Xi.
Yeah, that was Monday.
Chinese Party Congress.
Wait, what are you trying to say?
I'm just saying what a
Oh,
week.
what a week. Okay.
Yeah.
then earnings happened.
Yeah.
That's what else happened. And we had a remote at the New Jersey Institute of Technology.
It was just a lot.
Well, our Bloomberg Business Week weekend show features Andy Brown, former editorial director at Bloomberg New Economy, now a partner at Brunswick Group, discussing China President Xi Jinping's consolidation of power. Here's just an excerpt from that interview.
Victory for Xi, absolute triumph. Gets his third term, basically, if he wants it, ruler for life, packs the Politburo Standing Committee with his own people. People say he's the new Mao. Not in the sense that he's about to unleash chaos on China. I mean, he wants order, but in the sense of power, in the sense of prestige, in the sense of his place in history. In fact, he may actually have more leeway than Mao. Mao, after all, had to launch the Cultural Revolution to get control of the party. Xi has no rivals, no peers, and no successor. He's alone at the top. Now, what the markets are reacting to is the fact that this wasn't just a personal victory. It was a victory for his policies, the policies that have so alarmed investors, portfolio investors, as well as global companies investing in China over the last several years.
All right, that was Andy Brown, who leads the China Hub as a partner at Brunswick Group, and also, of course, the former editorial director at Bloomberg New Economy. You can hear more of that interview on our Bloomberg Business Week weekend show tomorrow at 8 a.m. Wall Street time on Bloomberg Radio. Check out our podcast feed at Bloomberg.com. NASDAQ Golden Dragon China Index down about 11% this week.
It was down if it didn't have today's, the lowest it was for the week was 21%, Carol, because we did see a couple days where investors came in and bought.
Yeah.
But yeah, down 11% for the week when everything else was rallying.
Yeah, exactly. So interesting to see those Chinese names in the U.S. really see some pressure selling.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks end a turbulent week with a sizable gain. The Dow today up 828 points, up 2.6%. The S&P today up 93 points, up 2.5%. NASDAQ up 309 today, up 2.9%. NASDAQ 100 index up 3.2%. Do not want to ignore the Russell 2000 up today by 2.2%. Those weekly numbers big as well, with the Dow surging 5.7%. S&P this week up by 4%. NASDAQ this week up 2.2%. Apple's earnings report helped lift tech shares. Also, a smattering of economic data suggests a modicum of progress is being made in the Fed's battle against inflation. Apple, by the way, after earnings up 7.6%. Amazon after earnings down 6.8%. 10-year yield 4.00%. The 2-year 4.41%. Spot gold down 1.1%. $16.45 the ounce. West Texas Intermediate crude down 0.9%, $88.30 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to continue our conversation because with us are the authors, I should say, of When McKinsey Comes to Town, the Hidden Influence of the World's Most Powerful Consulting Firm. We've been talking with one of the authors, Walt Bogdanich, and joining us right now is Michael Forsyth, both investigative reporters for the New York Times. Michael, a former Bloomberg News journalist, we wanted to point out as well, both of them on the phone in New York City. And Michael, we've been talking with Walt about why you guys did the book, concerns about, potential conflict, getting that client list and what it revealed to you. One thing I did want to share is that McKinsey has actually put out a statement, and it's on their website. It's in the media section, and it says, quote, "A recently published book fundamentally misrepresents our firm and our work. The book also seeks to associate our firm with events like the 2008 financial crisis, a Major League Baseball cheating scandal, or safety incidents at a theme park that we simply had nothing to do with. Perhaps this is why the book contains more than a dozen disclaimers across these and other issues, acknowledging that our work did not cause or was not associated with the trend or event for which the authors criticize us." And I would love for maybe both of you to weigh in on this. Michael, why don't you take it first?
Mm-hmm. So, McKinsey did put out that statement the day we published the book. We, in the book, look at so many issues across the world, where McKinsey has had a very big impact, and in many cases, very negative impact. South Africa, China, Saudi Arabia, looking at the opioid crisis, their work with tobacco companies. There are so many instances where they did have a big impact. I don't think we ever would have written this book if we didn't think McKinsey made a difference. And of course, there are many, many projects at McKinsey, many things that we never hear about because, they go fine and they do plenty of good work as well. But like Walt often likes to say, as journalists, we don't write about the aircraft that safely take off and land. We write about the crashes.
Right.
And the fact is that at McKinsey, there are so many airplane crashes, so to speak, and that's what we've compiled in the book. It's more than just a one-off incident.
Hey, Michael, what did you guys find about the company's financials? And, I think a lot of people hear about, at least in my experience, have learned about and hear about the consultants who spend 4 or 5 days on the road working on secretive projects and traveling to different places for a year at a time, for example, and maybe doing that for a few years, and then they get into their 30s and they go off and they do something else and, potentially become the CEO of a different company. What about the partners who stay there, and how is their wealth tied to these projects?
So they're very well paid, maybe not as well paid as a private equity, partner or, a hedge fund manager or the CEO of a bank on Wall Street. But, we're talking millions of dollars, $3-4 million for senior partners at times. So, or even more. So they're well compensated. They also can invest. There's an internal hedge fund called the McKinsey Investment Office where they can put their money as well. So, they're well paid. But as you said, a lot of people do leave McKinsey and go on to do other things. And, many CEOs of Wall Street Bank, the CEO of Morgan Stanley is a former McKinsey consultant.
Hey, Walt, come on back in. Tell us about who you talked to, both of you, who you talked to do some of this book. A lot of, I'm assuming, right, former McKinsey insiders.
I'm glad you asked that question because every McKinsey consultant signs a non-disclosure agreement. That's a tall mountain for us to climb. We don't have subpoena power. But let me tell you this, we kept digging and digging, and by the end of it, we interviewed nearly 100 current and former McKinsey consultants, which I think is astounding. And the reason we did that is because McKinsey hires, by and large, responsible, idealistic people, the best at the schools where they recruit. And when you hire those kinds of people and they see a difference between what they were told when they were hired and the McKinsey's actions in the real world, they get unhappy. And fortunately, they were able to find our phone numbers and they called us.
Walt, have you heard from more folks at McKinsey or formerly at McKinsey since the book came out?
I would say like in the last 10 minutes, yes.
Wow.
From around the world. And they, at this point, what are we going to do with that? I don't know. But we're certainly collecting it. And if after discussing it with our editors, we decide there's more to be written, we will write.
So, Michael, it raises the question about some sort of internal change or soul searching happening at the firm in the wake of you publishing this book. Carol mentioned the statement and read the statement in full, which again you can find on McKinsey's website in the media section. But do you get any sense that McKinsey has changed or will change?
Well, they did make some changes, and it wasn't after we published the book. It was around 2019, after we had published quite a few stories about them, including their work with Purdue Pharma. And they changed the way they select clients. At least he said they did. And they have more people reviewing, potential new clients or new projects to make sure that there's not a reputational risk, to the firm.
But is there there is my question. Is there an indication that that's happening in a material way?
It's really hard for us to tell. Of course, they've said they no longer work with opioid makers. They no longer work with tobacco. That just happened last year. So there are some areas where they just don't work anymore. They're a little more stringent, they say, on working with authoritarian governments as well.
I think it's important to point out that the managing partner who pushed for these changes, Kevin Snyder, was voted out of office after they went into effect. So I don't think that these changes were universally popular over at McKinsey because it limits the amount of money that's coming into the firm. And he now works at Goldman Sachs. So, he went from one well-paying job to another.
Walt, is it fair to say that it's just, in an era where we all don't maybe totally get the relationships? We talk about cryptocurrencies and Matt Levine's massive piece in the current issue of Bloomberg Businessweek magazine, this whole idea of this need for transparency so that we all know either what we're working for, what the company stands for, or what kind of relationships are going on. I'm just saying it's just kind of a call, Walt, for greater transparency. You just got about 20, 30 seconds.
Yes, I agree, particularly when, the consultant like McKinsey is working for the government. Accountability is a must. Taxpayers want to know what their government is doing with their money. And when McKinsey's doing a lot of the government work and being quiet about it, that's a problem.
Well, we all appreciate both of you joining us on this Friday afternoon. Walt Bogdanich and Michael Forsyth, they are the authors of When McKinsey Comes to Town, the hidden influence of the world's most powerful consulting firm, investigative reporters for the New York Times, award-winning journalists. Interesting.
Really, really interesting stuff. Really appreciate them taking the time and coming on the program this afternoon. Carol, what a week.
Oh my gosh, get ready for the Fed meeting next week. But first, check out our weekend podcast. Some great interviews about the big issues of the week. Check out your crypto show.
Yeah, tonight on Bloomberg TV at 8:30.